Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live in studio. A special day here in studio. Happy birthday to the one and only Shy Girl.
Thank you.
She is, of course, also our senior economist, so there's that as well. So excited to have you here on your birthday, Shy. And, of course, we are joined by Jimmy the Cagnina, senior market strategist over here at NinjaTrader Live. Good morning, Jimmy.
Good morning, folks, and a special happy birthday to you, Tracy.
Well, thank you.
Yeah, we're going to be saying happy birthday to her all day today. I'm sure that we might have something else going on for her later. We'll see what happens. But ultimately, good morning to the chat as well. And here we are, everybody. Here we are. Shy, I don't know where to even begin. In my morning note this morning, I said it's the perfect storm for equity bulls. And I say that because gold comes off its high, bonds rally, rates come down, Trump backs off Powell, lays off his stance on tariffs. What more could you want?
Right? Exactly. I mean, I noted last night the headlines came in that Trump had said that he 154% tariffs on China weren't going to happen. They're going to be much lower. They won't be zero. Those headlines came in right before the market reopened. And I was like, what are the chances this market opens gap up? And lo and behold, we did.
I mean, Jimmy, you heard what I said. I think it's a perfect storm for now. I'll get into that more as time goes on this morning. What are your thoughts about what you saw happening overnight in the markets?
Well, I was on the open. I was there. I was checking out the trading ladder on the mobile app, and there was some relatively heavy bids and offers in that book as this market just took off with a snap of the fingers, just like Thanos. And it was pretty incredible last night. But, this is such a crazy, wild, news-driven, rumor-driven environment right now. I'm only cautiously optimistic. I mean, I can see all the different asset classes doing exactly what you just mentioned and what they're supposed to do. But I'm a little bit weary here. But yeah, it's looking pretty good from that point of view. And then we could talk about Bitcoin in a little bit as well, because that also caught a pretty big bid.
Yeah, ETH up almost 6%, Bitcoin up 2.25%. I heard this the other day, and this isn't my line, but it's exactly the way I've been thinking. And I thought that this person, I don't even know who it was. I was listening to it on the radio driving into work. I think it was CNBC. And he said, you don't take the confidence genie out of the bottle and put it right back in. And that's really what I've been saying. If you go back to the 90-day pause, I said, this might be bullish for now. We all know I was bearish that next day. And I talked about how confidence is rattled. This is not how you build confidence back in a market. Once it's shaken, it doesn't come back right away. I was texting with Pax about this again last night. I said, I think this is bullish in the short term, but I am just not convinced that this is over. It's just too erratic, all the communication. Again, and I don't want to make this come out like I don't want him to be doing these things. In the administration, I think a lot of this is really good stuff going forward. But the markets, once you rattle that cage, it just doesn't come back that easily. And I think they need to tighten up their communication.
Well, absolutely. And, markets are just looking for a chance to rally, right? Everybody's used to buying the dip, so they're going to take any headline. But if you kind of dig deeper into that press conference that he said that, there are still no talks with China, right? And even China came out this morning and they said they'll be willing to deal, but not under duress. So, Trump is just saying these things, but we don't have anything solid as far as communication between China and the U.S. It's not like trade talks are going well. They really haven't started any trade talks. So these are just headline-driven rallies, which makes me sort of suspect that, these can come right back down on the next headline or the next tweet where, he goes off again on Powell or China or something else happens. In other words, it's not a healthy market action that we're experiencing right now.
Yeah, I'm total sus to both sides. I mean, more positive news can come out and drive this even higher, right? And negative news can come out and take us right back down. Because ultimately, again, these are just kicking the can down the road type scenarios. And I just can't stress this enough. I've been through this a lot, in my career. Obviously, President Trump is different than pretty much anybody else. But when you go back I can go back into the days where we had, I actually think Powell's done a decent job. And I know I don't remember who it was. I think it was Gary Brody this week. He was like, he was late and then early and then late or whatever that he was saying. And I can't disagree with what he's saying. But I think in terms of communication, he stayed relatively steady. I can go back years and think like the Greenspan years. Remember we were looking at like his briefcase and like all this uncertainty. And I remember like the tape just is unsettled all the time. And all of a sudden he's doing surprise rate cuts and all these different things. When you have somebody who's got that much power to move the markets just, they don't tend to trend very well. You tend to just have a lot of back and forth. And I continue to think that's what you're going to see in equities. And I don't think that this rally is over in gold. I mean, I think it's over for now, for sure. I don't see a path to gold going back up and taking out that high in the coming sessions. I think it's unlikely for that. And we'll see what happens with treasuries. I mean, Jimmy, I want to see what you think about that, because this is where I think we really start to learn how the market's really taken in this news. I think equities, do have an underlying bid in them for now. I think that this news is definitely positive for them in the short term. But the bond market can't get past this. And, we saw a rally in bonds this morning. What are your thoughts on them?
Yeah, I think that what I was really interested in is the spread between the 10-year and the 2-year. We have a subtle movement. We went from about 28 basis points a few weeks ago to about 33 basis points this morning, last time I checked. So a slight widening of that part of the yield curve right now, which we'll see if that continues or not. That could be an encouraging sign. Investors might think that's good for future growth. And the treasuries, though, they're not dead. I mean, investors are going to invest in treasuries. There's not, the world is not abandoning the U.S. Treasury market. It's going to be there. It's kind of a bedrock of security still, and that in my mind, the longer end is only going to appreciate over time. We're going to have some dislocations based on this crazy news cycle that we're getting, but overall, I think the trend is going to be up for the prices, and yields should start reacting accordingly.
And see, I actually feel a little bit on the opposite of that. I don't disagree with what Jimmy's saying is, but I continue to look and see people outside this country vacating bonds. I don't know what you think about this, Shai.
Yeah, I mean, there are a lot of rumors that everybody's dumping bonds. Not everybody is dumping bonds. But, the majority of the bonds held are within this country. So you have to think about it that way as well. I mean, we own most of those bonds, or the central bank does. But that's not to say that we're going to see, we just saw Saudi Arabia sell off some of their bonds. That's not surprising given the price of oil right now and them needing dollars. So, that does make perfect sense. And really, as far as China is concerned, they have a lot of bonds stashed offshore that aren't in their books, so to speak. And so that gets kind of murky when you talk about China and their sell-off, because they have bonds offshore elsewhere.
Yeah. Jimmy, get back to you about the dollar, because I'm glad that Tracy brought this up. I mean, you've got mixed signals kind of across the board with dollars. Some things up, some things down against the dollar. Thoughts on that?
Yeah, we're seeing a subtle strength in the U.S. dollar right now. Not surprising given the relationship between the assets, but nothing that big for me to say, well, there's going to be a serious directional change. We're not there yet, but I'm looking at my favorite, the Swiss franc right now, and the U.S. dollar is a little bit is stronger against the Swissy today. There's news that they may cut rates again, the Swiss National Bank, and get into a negative environment. That's how much stress they're feeling with their import-export situation in Switzerland. So we'll see how that continues on. I mean, the euro is still super strong versus the U.S. dollar, even with a 1 or 2 day pullback here. So that trend is not broken.
Shy to you on the energy markets. Crude minor pullback overnight. I don't think it's too tied to what's happening with the news that we talked about. Any thoughts on energy markets this morning?
Yeah, well, last night, Crappy came in with a huge draw. Markets did absolutely nothing on it. Not surprising because that number tends to be very wrong. We were up a little bit overnight, kind of on that China, hoping that we're going to get a deal with China. Since we have, sold off some and, we're down 0.47%. And so, I think the crude market at least is still worried about overall demand issues, global demand issues on these tariffs.
Yeah. So today going to be focused on equities. There's a lot of other things going on. And I will continue to say this throughout the morning. Keep an eye on the bond market. I know that today they got a lift. And what's interesting is that this news, look at the timing of it too. Come on, gold's on the highs. Gold was already coming back down, right? Yesterday we saw that, or wasn't it yesterday? It was 2 days ago. We saw that one way down on a Monday morning where we just had that ripper higher. And now we know why. There's probably a lot of bids down there. You can't tell me differently. Sorry. And all of a sudden they're just driving it back up here now. And you wonder, how much steam it really has. I think it's going to be a battle for the next day or so. We'll see what all the crew thinks today. I know we've got Helene Meisler this morning.
Neely Tamminga.
Oh, Neely Tamminga. I put Helene in my tweet. I'm sorry. I'm sorry, Neely. I just started following Neely too, and we're starting off on the wrong foot here, Shy.
What are you doing?
Helene's probably saw my tweet tag, and she's probably like, Anthony, what are you talking about? I'm not going to be there today. But we look
I told you it was Neely. So
I know.
She's a co-founder and CEO of Distill IQ, which is an advisory firm on consumer behaviors. She's also an econ professor, and so we'll have lots to talk to her about. I want to talk to her about are we starting to see kind of weakness in the consumer and what this means going forward, and a lot of other questions too. So it'll be fun.
I'm changing my tweet right now, everyone, just so you know, fixing it. Neely, don't go back and log in. Hopefully she's not already in the green room, listening to us. But no, I'm really looking forward.
Yes.
I followed Neely just because you mentioned she's in the green room. Here we go. Do you see this, Jimmy? This is how it starts off, right? I'm going to have to be really nice to Neely this morning.
Anthony, I am like not. I'm the world's worst tweeter. I just started doing this. I'm not good at it, but I did get this one right this morning. I just want to rub it in a little bit.
Oh no! And you know what, Jimmy? He's a good tweeter, I think, and he needs to get more followers on Twitter. Everybody, right now in chat, you better go follow Jimmy on Twitter. He does an amazing job. Every morning, he's probably one of the first tweets I read. I see that Shai's been tweeting for like 90 minutes to 2 hours when I first wake up. Yeah. And then I get to Jimmy's tweets, and then I get to everybody else's. I know. It's but yeah, no, I'm excited to speak with Neely today. Before we get to this morning's Edge Report, we take a look at some charts. Any economic data?
So we have building permits at 8:30, not really market moving. At 9:45, we have S&P Global Manufacturing PMI, Services PMI, and Composites PMI. 10, we have new home sales, not market moving. And 10:30 a.m., of course, will be crude inventories with my fave.
With Kane. Oh, God. You know what? Kane said he might be trading crude this week now, too.
He said, I'm going to hold it to him eventually.
You got to drive that home on him, man. Yeah, listen, we need Kane, out of his comfort zone. I think he thrives really well in that situation. So you got to put the heat to him. Now, as usual, we look forward to Wednesdays with Kane. So, big lineup today and going to be a busy day. And, who knows what else we get coming across the wire. And before we get to Jimmy's Edge report, I know we heard from you about economic news and everything, but anything else we missed from this morning's news that we should know about?
No, I mean, I think that was, that was a big
enough?
deal. That was kind of enough. Tesla, obviously, earnings came in terrible yesterday, and it's up 7% today, of course.
Yeah, again, the timing's impeccable on all this. Well, one of the things that I know we didn't talk about, it's not market news, but what RFK Jr. is doing to take the food dyes out. I was reading about that this morning on X, so it's going to be like mandatory to take that out.
Yep.
I think that's cool.
I like it. I think it's great. Any petroleum-based food dyes have to be taken out.
Yeah, exactly. I know, because when I saw petroleum base, and I'm like, right away, I was, it was like early this morning. I'm thinking to myself, it's like, what's going on with that? And I read into it, and I was like, oh, that's a great thing. Well,
Yeah.
So cool. All right, everyone, it's about that time. Let's send it over to Jim Cagnina for this morning's Edge report.
All right, let's start out with the Bitcoin right now. We had a double interesting timing, by the way. Yesterday, ARK invests 267 million in Bitcoin. Fidelity 253 million in cryptocurrencies. BlackRock 193 million, and then later on, we have SEC Chair Atkins, who is sworn in at the White House. His top priority, by the way, is to have a firm foundation in digital assets. So you had a double dose of buying occur. We just broke out of this, longer term area resistance at 88,000. We're on our way to my magical 95,750 level. A close above here, we could be off to the races to 100,000 and above right now. So Bitcoin is on the move. Let's kind of drill back into the E-mini S&P for a second on a daily chart here. Another crazy 2.34% rally overnight from that. There's a huge gap down as well. We're going to have to talk about that a little bit later, but a huge gap up, I'm sorry. And then this market just kind of took off right now. A little bit of retracement, but we got we're driving back up to R2. That's the key level here, 54.42. On the upside for the mini S&P, there's nothing but a lot of blank spaces. So you get to 55.25, which is a Mentor Q blind spot here as well. So there's a lot of upside potential with not a lot of areas of interest. On the downside, though, interestingly enough, the old point of control anyway from overnight was right at that 0 DTE call resistance and gamma wall. That's at 5,400. I think that's framing the downside of the conversation. But again, maybe this is just one of these trend days up. I don't know. The top of the London's initial balance is 54.15. So that's when I would probably have a little bit of a warning sign go off. Real similar on the micro NASDAQ here. Not much difference. R2 again is in play, and that's approximately at 18,896. And then on the upside here, nothing until we get to this call resistance level here, and that is tracking 19,250. On the downside, we have that one-day max, that Mentor Q one-day max, which is right where the point of control is, interestingly enough, at 18,740. And then further down, R1 is kind of holding support right now. Again, big gap, though. We have that big gap up in the stock index futures. Gold, as Deli pointed out, is kind of gap down, but that gap was filled, and now we're kind of moving our way back down to that S2 level. And that S2 level right now is 32.96, bottom of the value area, kind of holding. And interestingly enough, we have a little bit of support at the bottom of the London opening range. For the bears, though, we do have a one-day min up here, which is at approximately 33.66, give or take a couple ticks. No major jack levels. The JAX 1 is way up here at 3,400. So we've fallen a lot in this particular marketplace today. Crude oil, really quickly, as Tracy mentioned, this is kind of making new lows as we speak. I have to adjust my chart just to catch up with it because the candle was on my keyboard a second ago. The next step down, we have the high vol level, 0 DTE, $63. And then going down for the bears here, S1 and previous sessions lows are right on spot, right by JAX 4, triple area of interest right here. between 62.80 and 62.73. So there's still some room to go. And actually, we have even more, a whole bunch of gamma levels and other areas of interest below. 66.20 is that one-day min. So it's pretty far down. So there you have it. That is today's Edge Report. Back to you, Deli and Shai.
And Neely. Good morning, Neely.
Good morning and happy birthday to Tracy.
Oh, thank you.
So everyone, Neely is the co-founder and CEO of Distill IQ. Neely, first time we're meeting, just followed you on X. Everybody in the chat, give Neely a follow on X. I went through your tweets a couple days ago when I knew that you were going to be on air, and I'm really excited to have you here. Big news overnight, a lot of news. Initial reactions to all of the news we heard.
You know, I agree with you and your earlier comment around it's hard to put that uncertainty genie, back into the bottle. And while I personally am grateful for the little bit of breather and reprieve, I can imagine every CFO who manages to dollars and not hope, they're still going to be preparing for what are tariffs around the corner. It doesn't matter if it's 142% or 25%, tariffs are coming. And I think that's something that we're really mindful of. So grateful for the reprieve. And also, we're not done, with this news cycle.
And I wanted to ask you a little bit. Well, I've got quite a lot to ask you, but first, a lot of people are talking about we're going to have shortages. I want to know how do you see the health of the consumer right now? Are we tapped out? Do we have a problem? Would we have shortages because you could have higher prices and nobody buys anything because they're kind of tapped out? So where are we kind of sitting as far as the consumer is concerned, and what would that mean for, retail sales?
Great question, Tracy. The consumer has been historically incredibly resilient. I mean, even when you can go back to some recession years, they were spending well into what was already occurring as a recession. So if you're looking for the consumer as a leading indicator on consumption, that's not going to be the case. It'll be too late by the time you see them pull back on consumption. That's just the way that it's been. It's the way it probably will be. Right here, right now, what we're really looking at is how well did tax season go for that kind of incremental discretionary spending. We, of course, are right past through tax season, and overall we saw very likely the average refund was higher, but the number of filings were down, which we believe is somewhat contributed by what went on with the fires and the delay over in the LA County. But also you have a situation where we do think that taxes paid in were significantly higher. So we track this on a daily basis, and you could actually see that electronic SECA taxes, non-withheld, so it's like people cutting checks into the government, you were up handily, I think like 22% year to date in 25 versus 24 for the whole tax season so far. So we think that people have been having to cut checks to the government, and that's less money effectively in consumers' pockets. But that is tax season. Retail sales overall, what you've seen is just a mixed bag. January was up 4-ish%, and then you have February was horrific. It was actually a decline year over year. A lot of that we think had to do with the delay in the earned income tax credits and how that was paid out. And then you saw a snapback in March, up about 4% Again, we look at seasonally, not adjusted for season year over year. So the real question becomes how much of March and how much of April will be that pull forward consumption as people were buying toilet paper again, I saw limits, in my local Costco, or autos have been very strong as people are trying to buy these cars, before the price tag goes higher. So even when you see retail sales come out in April, you might actually see like a strong quote consumer, but it might actually just be a consumer who's been trained into preventative consumption.
That makes sense. And then I wanted to talk about another thing, because we talked about this on Mic Drop Markets over a year ago. But now I want your opinion on this student loan thing. Obviously, defaults are being recorded now, suddenly. May 5th, I guess, collections start. And when we were talking before, you thought the Fed might pull forward cuts in order to counteract kind of the damage that this would do when the storm sort of hit of all this. Well, it looks like, the storm is here. So what, how do you think the Fed, well, one, how do you think the Fed reacts to that? Do we see a cut in May or June or July, I'm sorry. And, again, what does that mean for the overall economy?
So great. It's this is when I put my professor hat on a bit, and I think about the faces I get to see on a daily basis and the students that I'm invested in. I hope they cut, because it's the May 10-year auction that ends up indicating where the annual rates are on student loans. That's how they actually come up with the direct loan rates. And so I'm always very hopeful that we can lock in some lower rates for our students who are taking a bet on themselves and wanting to have a brighter future. So that's a little bit of talking my book, I suppose, as a professor. But I think overall, what we are very likely to see with student loans is the continuation of the reality of defaults and just this malaise in wanting to repay or needing to repay or believing you need to repay. And there's, I'm very divided on this, because I feel badly that I think we have young minds who were sold a bill of goods at election season with politicking that they were not going to have to repay their loans. And they acted in self-interested ways, as economists would want them to, and at times, right? Aligning with incentives and self-interests. However, a very close look at the Supreme Court ruling that summer of 23 would have been very clear that the president doesn't have the right to eliminate loans. It's a congressional act. Even Nancy Pelosi herself has said that and been on record about that. So, it's going to be a very tough civics lesson for those who have to repay. And I think I do think about those students. That said, what we're really watching for is what are going on with the employment trends among that 20 to 24 age demographic. And we've been all over Twitter with this. So, it's easy to go search our feed for our commentary on this. But the unemployment rate is still significantly higher on a 2-year basis, both with men and women between the ages of 20 and 24. So it's not just the question of will they repay, it's can they repay? Do they have a job? That's really what we're looking at and looking for. And we're a little concerned. Even the Fed Reserve came out. I just tweeted it this morning. The Fed Reserve came out with a study on college-age students, and it's showing a pretty decent uptick in underemployment and a downtick in wages overall. So it's the employment piece mixed with the we always say with consumers, it's the ability to pay or the ability to consume, as well as the willingness. So the willingness to pay has maybe not been there. Now we're checking in on that ability to pay. And I think for some, it's going to be a little challenging if the employment trends for this age demographic continue.
A question about the unemployment trends. We know that the Fed is looking at price stability, inflation, and we know that the other mandate is employment. Do you think that they'll start to cut and maybe, I don't want to say put a blind eye to what's going to happen with inflation? Maybe inflation stays relatively hot, but not as hot, maybe where it gets a little bit out of hand, but they focus more on unemployment if that does start to happen, and that's the catalyst for them to cut rates.
Anthony, we often say recessions begin in industries and demographics before they begin in economies. And that's unfortunately, it'll probably end up being too late by the time you see it. So this is why we're focusing on this kind of micro group of the 2024 age demographic. And I can come back to that in just a minute, because there's really two reasons why we're looking at that demographic, not just from a consumer perspective, but also from a business perspective. And then also it can happen in industries. And so one of the industries we're looking at is, restaurants is something we're kind of looking at as a bellwether for discretionary spending and income among boomers, as well as the Gen Zers, kind of that's where their discretionary spend can go. And so that has been on just a steady trajectory on a deceleration sort of trend. So something we've been watching actually very closely. Is it Ozempic? Is it because of income? But it's a fairly large employer of of new talent, in our economy as well. So it's one to kind of look at from a bellwether perspective. But one of the other reasons why we are looking at that 20 to 24 age demographic is it could be the leading indicator of how businesses are feeling about investing in their long-term talent. If you think about it, it isn't just about students in that age demographic, but rather are businesses willing to spend and open up their job roles, to that first time jobber into their ecosystem, investing in them for the long haul. Is it actually a proxy sign that they've been pulling back on kind of discretionary labor? So it's really a twofold reason why we're looking at that demographic.
We only got a few minutes left with you. I want to talk about gold, just because gold right now has been the dominant trend that has now been stalled because of the news last night. What are your overall thoughts on gold and where we are right now?
I can only give you my personal view on gold. I'm not a gold expert, but my family's been investing in gold and holding gold for a very long time. So we come from a long line of physical gold holders, and I've been very happy about that over the last few weeks. So not that's not a gold expert, a gold bug. So yes.
I guess the question could be more about why do you think that it's going up at the velocity that it is?
I mean, obviously the uncertainty piece, concerns about the value of the dollar, I think very, very clear, putting the economist hat on. But and it will fluctuate as it relates to what is going on in the market and kind of the underlying belief of, can we get our act together as a nation from a global stance and global perspective. I mean, it can be a little bit rocky when you have major economies like, France, questioning in public the value of the dollar. And that's gonna leave a mark on a positive mark, for gold holders. So I'm not here to make prognostications about where I think it's going to go. I do want to end though where I began, and that is, I agree with you. This uncertainty genie is hard to put back into the bottle, and CFOs were early in the year. There's no reason that they are not going to remain on this posture of caution and really stewardship around what is still yet to come. They have a lot of uncertainty to manage over the next 9 months before they put, the points on the board for the year. And I think they will remain either in a posture of dual guidance of no tariffs, yes tariffs, or, our guidance excludes tariffs, right? I mean, we're already seeing that trend. There's no reason to think that they won't continue that trend this early in the year.
Yeah, Neely, it's been great having you. I'm getting your Twitter handle right because I didn't tweet about you this morning. Don't hate me. I don't know if you heard me earlier. I said, we're gonna have Helena. No, it's Neely. Everyone, go follow Neely at Neely Neely Tamminga Tamminga on X. And again, co-founder and CEO at Distill IQ. And this was great. It's a pleasure meeting you. And we look forward to having more conversations with you in the future.
Thanks, Neely.
Thank you.
Initial reaction, Shai, hearing thoughts from Neely this morning.
So, I think that, again, I completely agree with her. CEOs are going to be very cautious. Have been listening to some of the earnings conference calls, and tariffs have been mentioned a lot. Some are cutting guidance, so it's going to be a big deal. And she's right. Even if it's not the highs, tariffs aren't the highs that he initially stated, they're still going to probably be at least 10% across the board. And so that's not as big of an issue, but it's still an issue for companies, especially smaller companies.
No doubt. I mean, it's good hearing from people that follow this up so much closer than we do. I mean, not than you, than me. I mean, it goes without saying. But, I always look at it at a perspective as, I'm just a day and swing trader, and I want to try to build a macro view. I want to understand what the market environment is, which is what we try to do here every morning on NinjaTrader Live. And, so I try to come from that perspective. And when I look at the markets, and having seen quite a bit over the years, I think that is the theme. It's just, when communication isn't clear, it isn't crisp, and things, you can't say it's part of the plan when everyone knows it's not part of the plan, and we see things changing, and we're firing someone one day and the other. Look, again, I don't think anybody was really upset about the path they were going with tariffs, but sometimes transparency isn't the best thing, right? Sometimes opening, it up to the entire public isn't the best things for the markets. And again, I think that shakes the tree a little bit, and markets are always like, you know what? Let me just sit back here a little bit. That's why I continue to think that even super bullish news or bearish news that comes out of the administration right now, I think eventually the market is just taking it in stride, and they're waiting for real closure.
Yeah.
We're waiting for real numbers now.
The problem is that could take months, more than the initial 90 days.
Yeah.
So just be prepared for that.
Yeah. I mean, again, traders, work your stops. I think it's good news for day traders.
For sure.
Because it's going to be busy, but know what you're dealing with. That's all it comes down to.
Absolutely.
Tracy, this was great. And everybody, light this chat up with a happy birthday for our shy girl here today. We better get a record number of likes. Don't make me go full influencer on you on Kane's day. We also have Kane coming out later today with a giveaway at 11 o'clock. Busy day, but again, Shy, you're the best. Happy birthday.
Thank you. See you guys in the chat.
All right, next up, we have the one and only Pharm D_KS. Good morning, my brother.
Good morning, Deli. Looks like it's been a relatively uneventful overnight session. How are you doing?
Oh, man. I hope that the chat slowly and surely, or the viewers, get to know you and how funny you really are. See, like, to me, I think, I crack up with you every day. It's like I want to start busting out because I know your dry sense of humor, and I'm waiting for the meme. And, this business is so serious, and we're all about preparation, but it's also about, this being with you reminds me of like having conversations with traders on the floor before I used to begin my day, and we'd have a little bit of banter and just talk about markets, and you lighten the mood up a little bit. And so I appreciate that from you every day. I mean, initial thoughts. I mean, you heard us this morning. I saw that you were in here early. You heard from Neely. What's your just initial thoughts of the news overnight?
I mean, this is somewhat similar to the 90-day pause. I think when we talked about it, I don't really think it matters in the big picture, but we had gotten to a point where we were pretty overextended to the downside and washed out. Positioning was just in the gutter. We talked about, I was looking for NAIM in the, 20s to 30s. And I think we hit 35 last week. My kind of internal name, on Monday was probably high 20s. So it was probably time for a little rally, and we got a nice trap. And that all happened before the news. I mean, Monday happened before the news, that sweep out of the 410 lows, and failure to get back into that lower distribution from that week of the 6th. I mean, that all happened long before the news. So, the news is what it is, but what did he say? Like, okay, I'm not going to fire Powell. Cool. You couldn't anyways. We're not going to have 145,000% tariffs on China. Okay, cool. You were never going to anyway. So like, that's the news. But to me, the move was somewhat set in motion when yesterday's gap sustained, and our sellers were not able to kick it back below last week's low. I mean, that was the move. And so the news came afterwards. Big picture, I mean, 90-day pause, again, the same type of thing. That doesn't really change anything from a business perspective. And your prior guests were just talking about that. So I think this first move lower, to me was never about tariffs per se, but the implications that they could have on the economy. And it didn't matter, whether it was a 10%, 20%, 30%, 145%. We're in a stagflationary environment, and tariffs don't necessarily help with that at all. And so this was the scare. And now we have to see, are earnings going to be impacted? Are the labor markets going to cool off? And are we going to see a real slowdown in either of those things? And so to me, that would be, the real issue that could present itself in the next couple of months. And we'll see, maybe it doesn't. And maybe we just walk everything back and, he says, just kidding. But I don't think anything he said changed anything at all. And I think the move was somewhat in motion, and it's all just a bunch of LOLs. But, here we are now with a very different looking market structure than we did on Monday, right?
Spot on. And let's go to the charts, because I want to start off with Bitcoin. Now, why do I go to Bitcoin? Because remember when we talk about how Bitcoin wasn't decoupling and it was starting to go with gold, and everyone was looking at it, myself included, saying, what's happening here? Is it's the risk asset? Is it maybe now going, really about to do what it was supposed to do and be more like gold? And what's interesting about Bitcoin, that in over the years, it's like I know better, and when I see this happen, and I've seen it happen before, sometimes when news is potentially getting leaked, not a total conspiracy theorist here, but I do see this happen quite a bit. A lot of times the crypto market will be the first place it goes, right? And Bitcoin just all of a sudden takes off. It's got a nice big rally going up when equity's going down. And then you get some news that Bitcoin remains bullish. Pretty interesting to me. Sometimes it could be a sign. It's not necessarily it wasn't decoupling, but it was more of a sign that, look, at money's going into a risk asset like Bitcoin. And who knows, maybe there's a headline around the corner. Sometimes those are the types of things that you do see happen. Also timing of gold. I mean, look at gold. I mean, and hat tip to those that were short in this. I don't short markets that are, parabolic like this with Bollinger Bands open the way that they are. I saw a lot of people on X were talking about taking, gold shorts. I actually joked about it with Shai, but I'm like, I would, but I don't know where I'd put my stop is the whole problem. And look at the timing on that as well. So what happens, it's just, to me, it's always impeccable in the timing. You go back to where the 90-day pause was, you go where this is and kind of what's happening. A lot of this stuff gets a little leaky. And, here we are. And again, I think that sometimes there are just these signs that are happening. I agree with you. These moves were already underway. The tape was telling us, I think Merritt nailed it yesterday where he talked about, I had 5130. A lot of us had that level. You and I were talking about it was basically that low of that area. And, I was actually short going into it. And then I got short again yesterday, which is, kind of going against what I'm doing. I've gotten out of everything at this point now. But the point of it is like the tape told us it actually wanted higher. And just that little bit of good news, even though it's not complete resolve, the tape was telling you prior to it even happening, moves were underway, fade with caution. So, I don't know what you think about what I said about gold and Bitcoin, but, sometimes I see these types of things happen and they're head scratchers.
Yeah, I agree. There was definitely, it was hard to think that we were going to go direct to 4,400 or something on ES, this week, next week, with Bitcoin looking at least constructive at that point in time, right? There is, perhaps a bit of a decoupling, and maybe it wasn't all a hidden risk on signal. But it definitely was hard to be overtly bearish for some kind of massive collapse and new lows with Bitcoin constructive, at least. So I think there was at least some kind of signal to take away from that for sure.
Yep. And now we go into the equity markets today. And so, in my morning note, I think that this is temporarily bullish. Again, we've talked about this on how we think the uncertainty is still there. But in the short term, a move was underway. I think that the tape wanted to be bullish. It got bullish news. It's working together now. Hard to want to fade it. And this is someone who's like myself, who's been bearish since this 90-day pause. I actually think now I've turned pretty bullish. And when I look at what's happening, it's hard for me to see a reason for us not to take out the 90-day pause highs. I know the S&P took it out the next day, but for NASDAQ, I think that's where they're headed. When you look at, I like to anchor the VWAP from the low. I talked about that the other day. That VWAP comes in. It was just about where yesterday's high was, basically 18.4 and change. You got the 8-day moving average around 18.590. We're now crossing above the 21-day, which is pretty bullish, just around 18.9. You got the 34-day at 19.277, and that puts us right near those recent highs. That recent high in NASDAQ was 19,386. Hard not to see a stop run headed up there. I think it might be a little bit bumpy because we're coming off of, again, a move I think that is underway, but you've got this gap, and I think with this news that they're not going to make it super clean and easy, and who knows, maybe they do, but I'd be very, very weary of shorting this market at this current moment. Again, it could be a gap fill today and then go. For me, I'm more focused on being long. And when I go and I look at like even RTY, that was one thing I looked at this morning, and look at where they are, making higher highs above the 21-day, took out that 90-day, or was right on it. It's either right on it or just above that 90-day pause high. Again, why does RTY matter? And I don't talk about it every day. Look what's happening in bonds. Okay. Bond market rallying the way it is, and this is relief for RTY. You now get a market that is full participation in the rally. As an index trader, this is typically what I like to see. I don't like divergence. I like when the indexes are breaking through highs at the same time. For clear trends, right? Some divergence for rotations back into trend, different story. But when we're working together, all going up, very, very hard to fade that. And the bulls have momentum technically, and they have momentum in the headlines. And I just don't think there's going to be a negative headline in the next day or two to kind of derail what they've just done. I know we've got earnings and stuff. We haven't talked about that much, but I think those are going to be the stories. But bond market going up really helps the Russell, which I think just adds to this party. And then here we are with the S&P. So I talked about this yesterday and the day before. I was trading around this 1 standard deviation of the VWAP. That's why I was short. We got back up to the 8-day, and I actually bought some puts yesterday into the close. Not right at the close, but earlier. And then as things came out, I ended up having to puke them right in the open. Wasn't the most fun thing to do, but it is what it is. Ultimately, I looked at it, I said, I'm just wrong. I'm like, I just cannot be even short. And I was just really playing this range, 1 standard deviation around the VWAP. And I said, if we got below here, I thought that the lows were vulnerable. And the Bollinger Bands, if you remember, they were opening up. And I said, if they start to get through here, I want to be able to make sure I've got a lead for a market to come back down. That's why I was selling rallies, not selling into breaks. And ultimately, that's changed. And now we're above a 1 standard deviation around the VWAP. Hard for me to see that 55, PAX has got 55.09 as a key level. That's right about where we paused on the 90-day pause. And then the high was 55.2875. 55.44 is the 21-day. Hard for me not to see us go up there. It's 100 points away. I feel like, they could do that in the first hour today. I'm not saying they're going to, but again, when I look at this now, this tape is firmed up substantially. That's what I've got. I'm looking to buy dips, looking to use futures, maybe not calls in this instance, but this is where I focus more on futures, but I got to be patient.
Yeah, I think that's right.
Maybe
this is wrong. Maybe this is wrong, but this feels like one of those situations where you get annoyed that the news came out and you decide that you're going to fade this all day and it doesn't end well. Maybe that's wrong. But it just kind of feels like that again with positioning so washed out into this. It feels like it could have legs, and that's coming from me thinking that this is nonsense and it doesn't really mean anything. But like, it doesn't change the fact that we had a technical trap of sellers and reclaimed last week's low. We've worked through that range. We could absolutely engulf the entire. We could complete that today and get back up to those upside targets. I agree. So I think we do still have the potential for a two-way tape, but I'm not really looking to fade this. Again, we're still in this enormous range here. And so because of that, you could see some two-way action, and inventory is getting a little bit stretched, just positioning of traders overnight. I mean, we're just about at the highs. I mean, the NASDAQ's at the highs and ES is right back up there anyways. So, pullbacks are fine, but I'm not really looking to fade this. So, I mean, if you think about it, it's dropping down to the 30. I mean, we could come all the way down and, tag 53.40s basically was yesterday's high. That's like, I mean, it's still reasonably constructive. I mean, I wouldn't want to see that if I'm a bull at all. But I mean, it's still technically a long if we can't get back into yesterday's range, right? So there's kind of a lot of room for bulls to let this go. The big reclaims for me this week was basically 5,400-ish. We talked about that last week. 5401 to 8-ish is what I was using off of last week's profile. That was an LVN left behind as we went double distribution to the downside last week. And I wanted to see if bulls could control 5420, 5425. And you can see that's where we stalled in the early session. And I was actually short here last night driving to my kids' choir performance. And but once this held, I mean, once they couldn't get into the gap, I mean, that's it, right? So to me, we could come here, we could pull back and just hold 20 to 25, and that's a nice long. We could come even here and threaten this 5401 to 5408-ish spot. And if that holds, that's fine. And it's not until we start getting down into this gap that, it at least looks bearish for a potential gap fill. And like, we're not even close to that. So to me, as long as we're holding above 5420 to 25, easy. But even really the 5400, 5401, 5408, I think we're going 5470s to 80s. And then, we can get to last week's high, which I want to say was 96 3/4. And then so 5509 is the quarter one low on a non-back adjusted chart because we hit that before roll. And so that's meaningful, big picture. And then the 5530s are really kind of the nasty spot. But, we did test it at least during that overnight session right after that, that big rally day. So I agree, unless we're making clear lower highs, lower lows back below 5,400, getting into this gap, there's not a whole lot that's bearish to me. So, where we're at 5450s now. So we could drop, 30 handles and still be at 5420 and be fully constructive, even 50 handles, 5400 and be fully constructive. So I agree. I'm looking for top of range out of this thing. And, if we do get some kind of, LOL, just kidding tweet come out during one of Trump's trips to the bathroom, okay, fine. But yeah, to me, this looks constructive and I'm not really itching to fade it. I said yesterday I wasn't really itching to fade that gap up, which is frankly is really weird for me because my sell button, like it's twice the size of my buy button. And it just stares me in the face and it's really hard sometimes. My hand shakes trying not to slap it. But I wasn't feeling it yesterday. I'm not feeling it today. You could potentially take an inventory correction short, to get a few handles or something. But I think you run the risk of missing a long in that case.
I mean, totally spot on. I mean, it was so funny. It's like yesterday. It's so funny. I was being so patient. I waited to buy the 5250 puts expiring next Friday. When we got just above 5,300, I buy them, and next thing you know, we cap up on the Climax Open. I'm just like, I stayed so patient, and now I'm just, looking for some liquidity to even get out of the options markets. If you ever had an options position going into a Globex Open following a news headline, it's not the most pleasurable experience. I will tell you that. It's pretty wide. It's pretty wide out there. You could you could put a Walmart between a bid and an offer. And it's funny. It's like today I come in and I look at it and go, so much of this move I feel like I've obviously missed. But you're right. It could break 100 points and I still would be bullish just because of the way that low was made. I look at everything. It's got to be really patient. I'll put out throughout chat if I'm looking at anything for today, but it's like, it's hard in this area because do you buy it up in here? I think it's going to be a little bit choppy. I know we got Percent talking as well this morning. You're right. And I put in, I was actually in a comment when somebody put a comment in chat, which was, I said I doubt that they're going to have, a negative headline. But again, you don't know. I mean, there's no doubt about it. I just said, I feel it's unlikely for them to just completely come off of what they did yesterday today. I mean, obviously, who knows? But do they want to derail what they've done? They're actually starting to get things that they want to happen again. Again, lower rates, dollars bid against some things, but it's overall dollars relatively muted today. I think that the administration almost just keeps a lid on it. And so we'll see. Again, we just don't know. And of course, Tracy will be in chat throughout the day. But we're about that time, Pharm, where we go to look at how do you dive into a day like today? I mean, for me, the levels are so wide, the levels I'm looking at. Probably nothing for me. But for you on a day trader's perspective, what are you seeing as the plan coming in today? What's the initial thoughts on what you're looking for?
Yeah, I mean, first I'll say for the bears out there that are mad at me because they know I'm a bear and I'm not looking to short this, like you really actually kind of want this to just keep going straight up with like no pullbacks. I mean, because the structure is going to be absolute trash to come back through on the way down. So just let them go. Just let them have fun. Let them bid it up. Ultimately, this thing will probably turn over for another leg. Even if it's not for a lower low, it's going to be fun to go back through this range. So don't hate too much. Yeah. So the first thing I'm looking for is, again, I mentioned, we're basically here. And I feel like this happened last week, right at 9 o'clock almost, where we're trading at the overnight high, and we just got a VPOC shift into the highs. And so that could be one of two things. You can look at that as a bullish VPOC shift. It's acceptance of higher prices, and it's very bullish. Or you could look at it and say, well, okay, well, maybe some of these guys are starting to take profits up here already. And you just monitor and react. Obviously, if we break higher, then it's the former. But it does open up the potential, at least to me, to see maybe some rotation here for the next 30 minutes until open or something. And maybe there is a break, just a small one that gives you a pullback to long. I've got, this 42 to 44-ish spot I consider pretty minor. I'm not really looking to long that, which probably means it's low of day since I said that. But I would love to see if we could get a bit of a pullback, inventory correction into these 54 20s, 2025. Even if you sweep out this low real quick and then reclaim 54.25, I think that's a fantastic long. And as I mentioned, like even coming down to 5,400 is not really that bad as long as it's not, cleanly offered, which could bring us back down here. So like we're opening up here. I'm never just slamming this long. I'll be looking at, some internals because we'll be, I'm not, what's advanced decline going to be, basically through the moon. Your tick score is going to be off the charts. So definitely waiting for some kind of a pullback, and they may not let you have it, right? I mean, they may just force you to chase it, and it's just not for me. So I'm not looking to chase any of this. I'll wait for some kind of break, which it may not want to do. And if that's the case, then I'll just let it go. But it doesn't mean that I'm going to be, short this. When you get it such a large true gap up, true just meaning like above the prior days, outside of the prior days range, the first thing you're looking for is that initial move at open. And it's hard to imagine the drive. I mean, if we were to open right now, it's hard to imagine that the opening drive would be higher being this extended. It's not impossible. But you're just looking for that first, maybe it's 30-second opening range, 1 minute opening range, 5-minute opening range. Are bulls willing and able to bid this above the open, or are they not? And so if we can't sustain above that opening range, again, 30-second, 1 minute, 5 minute, what have you, if we can't sustain above there, then it's probably time for a pullback, right? And so you have your choice. You can, attempt a short at that point in time and see where it gets you. But to me, that's like tight leash, probably, get some profits locked quickly and then see what your runners can do. Or you can just sit and wait for that pullback to give you a nice spot to buy. So I like to see the late overnight structure get cracked. If we do get some kind of inventory correction pullback, I like to see some stops get swept and it starts to look nasty. And, everybody thinks this is it. This is the gap and fail and 4,400's coming tomorrow. And then you just kind of, that's all we were doing was just correcting some inventory, hold here maybe in the 20s, something like that, and get long. So these are the two major spots, 54.2025, 54.01 to 54.08 that I would like to buy. But there are plenty of ways to chase a trend day as well, right? Especially if you're a volume profile trader, there are ways to lean into pullbacks and at least get a few handles on a trend day up.
Yeah, it's tough. And I saw some people in chat talking about this as well. I mean, when you have sentiment juiced up the way it is now, you got vast majority of the people coming in today bullish. Someone like me who's been bearish, I think it's a bear market, and it's like I'm bullish. It's like I'm questioning my own self right now. I'm flat though, so that's the good thing. It's like you think there'd be a little bit of a squeeze first. I agree with you. I'd be curious to see what Tanya and Kane think too. But Tanya a lot of times likes those wick slowers, take them out, and then come back in. So yeah, I mean, look at right now. We have almost 500 votes in the chat. Continue to vote, everybody. We got 58% bullish, 23% bearish, 19% neutral. And so sentiment's very heavily favored to the bull side today, and rightfully so. I mean, technically, we've seen things. We have a nice low. We've got news behind it, but it's never that easy. It just never is, man. And if it is that easy and it goes up and rallies, no one's in it. That's just kind of the way it is. But, so Pharm, you're the best. Everyone make sure you go and follow Pharm on Twitter. Pharm Navy, hit that like button for my guy. Always a trooper on the West Coast, getting up early, spending it with us. Pharm, thank you again so much.
Thanks, Phil. You have a great day.
You as well. Next up, the one and only Tanya. Good morning, Tanya.
Good morning, everybody. I'm great. It's Happy Wednesday. We are having a crazy gap up. And it might be hard to day trade this. I think you were talking about it earlier, Deli, that you're not even really looking at much today. Is that true?
Yeah, I mean, this is, for me, as somebody who holds positions for a day or two and mostly in the options market, it's like I look at this as a dead day for me pretty much. And even though I am bullish, I do think we're going higher. It's hard to participate in a day like this. When I see this coming in, it's just tough.
It is tough. Especially like when we're up 3% yesterday in the NASDAQ from yesterday's close. So that's always tough to deal with because you can go up to plus 5%. You can go up plus 7%. We've seen it. But doesn't mean it's going to be easy. I think said that the chat is voted 58% bullish. Yeah, it looks really bullish. And yeah, I always get worried when that happens. Like we said, when everyone's kind of one-sided, it might make it a little bit hard. We might, especially with a gap up, we might consolidate for the first hour. Maybe the move will happen after 11. We have 9:45 high red folder news, and we have 10 a.m. Orange folder news, like new home sales. So that's where I'll be probably focusing most of my attention time-wise today. I'm also bullish, but according to the 4-hour, it just looks very bullish, especially that gap. We never even reached back into it on like the 4-hour. So we can go ahead and look at that here. Right, we have this huge gap up. You know what they like to say, gaps like to get filled, but I don't know if it'll happen today, definitely, if we're so far removed from that. We filled this gap down that we had now to this, like completely filled it. So that looks very bullish. I think we're definitely heading for this buy side liquidity on NQ is like swing high that started this whole move down. We've been pretty much just raging higher. And on ES, that looks pretty good too. Those are like equal highs as well. So, yeah, and ES is up 2.6% today, and NASDAQ is up 3.1, and that doesn't mean that we can't go higher. I'm definitely not going to try to fade this kind of tape. Yesterday was funny. Yeah, I didn't get, I had my limit fill for the NASDAQ and it didn't reach it because it was just so strong. And basically I had no trade. And that might happen today too. Like if you're a retracement trader, if we just end up screaming higher, that might end up happening. I like to look for some sort of retracement first, manipulation, whether we're kind of come back into this 4 hour at 10 a.m. But that is it's quite a ways away. It's not too bad though. It's like 100 points away. It's totally possible for that one, but like to come back all the way down into here, unlikely. It's possible, but unlikely. I think that for bullishness, ideally I'd like to see the morning have a little bit of a push down lower, like a false move swing lower, so then I could look for then a shift back higher. I have this marked out, this gap up. You can see here actually, NASDAQ did come a little bit below this 6 p.m. open. ES didn't. Actually never even came back into it. So that's a slight divergence there. And then, so whether we come back into this hourly or 4 hour down here, like we have some gaps here. This is a previous where we broke a swing high and we have a fair value gap. It's a little imbalance from this high, this candle to this low. So ideally, yeah, we kind of just come back into here and then kind of have another shift back up higher, I don't know, like that's what I'm probably going to be looking for, something like that. That'll be ideal. But again, when I like to just talk about my ideal scenarios. Rarely do they happen, but if they do happen, then I'm ready to, put some money behind that and hold for conviction purposes. But sometimes, maybe we come back into this gap, maybe 50% of this. For us to remain really bullish, I would like to hold 50% of the gap up. So I wouldn't really want a candle closure, especially on the hourly, below this gap up. We can completely fill it. We did that one time, but then there might not be as much momentum to the upside. I think Pharm said that as well. So I want to be careful. Today's a 3% up day already. And, structure looks super bullish here on the 15-minute. You can see here, yeah, we didn't even come into this 15-minute fair value gap from here to here. We did on ES. And so NASDAQ's definitely stronger there because we just marked out here where NASDAQ took out this little Sunday open. ES didn't. And you see NASDAQ didn't even come back into here, this little imbalance on the 15. ES did a little bit, right? And we're just having these higher highs and higher lows. I prefer at open that we come back at least into here, right? And then this might be a sensitive area with this high being broken and this is an imbalance. Maybe then get a shift back up higher towards that buy side liquidity up there that I have marked out. But otherwise, I'm not going to be fading it, especially if we haven't hit this high there, because it's basically what I look at is price is moving between discount and premium, and it's taking out liquidity. And when for me, yeah, definitely higher, because we took out this liquidity here, this 4 hour low in the fair value gap. I had this as my target after we closed below this gap up here, and it did deliver to that. And we had a nice bullish structure shift since then, and it's looking very bullish. So I wouldn't be trying to fade back down. I'd be looking for, now it's going to take out the buy side liquidity, which are equal highs here on ES and NQ, and go back to where I was aiming for last week too. We could go for a weekly high, right? We can go for 1930.75s, and then after that we could even go for up here, like 19,900 is totally possible. We could totally get back to it. I don't think we retested the 20,000s yet since, yeah, in April. Yeah, we haven't come back to the 20,000s. Yeah, like it seems like yesterday that was kind of the case where a lot of bears got trapped, right? I was looking just in the afternoon. I looked at the close, I was like, wow, it just totally ripped them higher during the close, right? After you maybe some people got trapped trying to short this. It's just too bullish, right? So if you took a couple of paper cut short like losses yesterday, it's totally fine, especially since that 4 hours started wicking. I didn't get into any shorts during my stream personally because I never confirmed it, and then 11 a.m. afterwards I had some things to go do, and I just didn't have like a clear draw on liquidity at that point. So now I do, because we just closing so much stronger. And that's kind of my thesis today. I'm going to write down in my notes, like, not fading the bulls, right? Because it just seems like we just started this trend, right? We just had a huge up day yesterday, and today's a second up day. We could have a third one update tomorrow, right? So it's not totally not out of the picture. And yeah, people can get hurt in this kind of environment if they're trying to just continuously just fade or getting stopped out maybe by a tick and then trying again. Just make sure you stick to your plan. And if you take a couple of paper cut losses, always like a small loss is a good loss. Small losses are a pleasure. And just follow your thesis is my idea for today. And that's basically it. What do you think about that, Anthony?
Yeah, I mean, you go back to yesterday afternoon, I was watching Stowe and XYZ, and Stowe was committed to buying the dip. And even though we did rally into the close, he had several paper cuts on the way down. And once he got into his trade, he trailed it, all the way back up and covered it right on the bell. And again, it's a testament to what their strategy is, yours, and everybody that's really on here is. Taking paper cuts is fine. I actually look at the market and go, obviously, because of my time frame, I wouldn't be short today. You're saying you wouldn't fade it. But again, it's all about a stop. I mean, if we're grinding higher, I think that's the worst case scenario for shorts today, because that's like we're just grinding up and you're going to be, it's almost like you need some velocity higher, come back down, and then maybe there's a short there. And so that's, if I was to look short, which I'm not, that's what I would look for. And for the bulls, it's like we've talked about, Tanya, if we could get a pullback, the question is, are we going to stay committed to our preparation? And if we do get a pullback, do we really want to buy it? That's going to be the trick today, because now we've had a big move higher. Everyone's got this still hidden bias that the market's in a bear market, myself included. And if you do get a decent pullback this morning, how committed can you be to buy it? But again, it's all about a stop. But everything you said, I agree with. It's just really, really about believing in your preparation and being patient today.
Oh yeah, I agree. Like you can definitely find shorts in a short term, even if in a bullish market. You can find short-term shorts. It's all about your time frame, and you can make money like being wrong on the overall direction. And that always feels good, actually. And then if you get stopped out, I had that happen to me all the time. If I get stopped out where the market structure shifts and then we start going bullish, then that means I actually did a really good analysis, and because I got stopped out where it was invalidated. And yeah, I would hate if it's just like a slow grind up higher. I would also hate if we don't, if at the open we just don't manipulate downwards, if we don't have a little gap, like I said, if we just go straight up with no type of retracements, that's the worst too, because I like to wait for those retracements. And then you really have to manage your emotions not to feel FOMO. Like there's always another day, there's always another trade. It's not, the market's not going anywhere. And there's lots of times there's going to be better setups where you're more confident in it. Today is just a day where we have to see, just kind of wait and see. I'm going to wait until 9:45 and 10 a.m. news for sure. And then I'll have a better idea of where I want to put stops and which swing lows I trust. And if we fill these sorts of gaps up with completely, then I'd feel more comfortable with like putting a stop at a swing low here. Yeah, so it's just kind of a wait and see. We do have bullish sentiment and bullish structure. And when that happens, I'm not really trying to fade the 4-hour time frame, especially. So we'll see what happens today. I'm excited.
Yeah, I like opening range on days like today, PAX's 30-second opening range, to see what the new set of market participants are thinking right on the cash open. Because so far we've only had the Globex open. You know, we've had the Asia and London session digest this news. Digest is, it's really been not too long of a period of time. And you see what the U.S. markets think of it right away. And so, yeah, opening range to me is key. And then obviously getting through that, like you said, orange folder data, some red folder data. Not sure it's going to matter too much today. But again, it doesn't necessarily mean that it has to matter, but it could be a catalyst for a move in one way or the other. So that's what we'll wait for. Tanya, again, thank you so much. Everybody, make sure you hit the like button for Tanya. Tanya's in here with us Monday through Thursday, 9 to 9:15. And then, of course, Mondays she streams with us all day. Tanya, thank you again so much. Have a great trading day and a great day on your stream.
Thank you so much. Good luck, good trading, everybody.
All right. Next up, he doesn't have a Yankee hat on today. What hat is this, Kane? He's muted. We're going to have to send you to Leo's Streamer Boy Academy, dude. I mean, the fact that you had the mute on, I'm calling Leo.
Sorry. Forgive me. I'm sure everyone will forgive me soon. It's fine. It's a Pleasures hat. It's just another brand that I'm slightly obsessed with. I have a thing with hats, so yeah, good hair and I wear hats. Criminal, right?
I mean, really. You don't see me coming in here wearing hats. Imagine if I did wear a hat. Everyone would be like, who is this guy? They wouldn't even know who I was if I pulled up with a hat. I could look like a completely different person.
They'd think you'd lost your hair.
Yeah, exactly. No doubt. And, you know me, I'm on a three-week cycle for a haircut. I don't miss. I don't ever want it to look any different. I want it to be the same. I want it to be just so consistent for months on end. I never want to shift.
It's part of the personal brand, Eddie.
That's right, buddy. If you've got it, you got to lean on it. You got to stay with it. Commitment.
100%.
Speaking of commitment, we've got a giveaway for you today at 11 o'clock, which is going to be cool. Yep. We've got Shy Girl's birthday, so she's going to be coming in at 10:30 to talk to you about crude oil. You better be ready. You better be nice to her.
I'm going to be nice. I even
that.
bought crude oil data. So, it's crazy. I know.
You see that, Shy? Yeah. So, and of course, we've got your stream, which I always look forward to every Wednesday with you. You've heard you were with us early this morning. Not so early for you because you're in a different time zone than we are. But what are your thoughts right now, just on the overall market before we get to the charts?
Look, I really agree with what Pharm said, right? Like, what did we learn last night that we didn't know before? Okay, can't fly a pound. They're not going to go to war with China on tariffs. I mean, that was just the inevitable. It was just the nail in the coffin, right? So when we get a big reaction like that, I like to fade it. But that's just because I'm a bear and we went up. So it's probably some sort of bias in there in reality. Probably the most bullish thing we heard yesterday is that Elon Musk is returning to Tesla, and Tesla earnings was awful, and it went up. So they're like, everything came out at the right time. I don't want to get too conspiracy theorist on it, but everything all came out at the right time, and the market all seems to be pushing up. I love to fade that, and especially when everybody is bullish. Really sadly, but I like to hear people are flipping bullish, because that's when I can envisage like max pain in the market, and I like to trade max pain. It doesn't mean that I won't get hurt, because I typically do, but luckily it just, I may get hurt here, but over the period I'll come out swinging. So yeah, I like to fade it. I like the levels we're at. I agree with Pax's level on ES. I think it's just that right level of, we're breaking out, and then they just sell it. That's what I want to see, and I want to be in that. So I don't really like this morning's price action. I don't like the fact that we didn't take a 4 hour low at all, really, since the gap up. That 2 o'clock rally yesterday, someone knew something. They were buying that up when it probably should have sold. So yeah, I'm just, there's a lot of exposure in the market right now, and it would really hurt a lot of people if it retraced. So I want to see it retrace, and I want to be part of it, basically. But nothing's new.
Listen, you could go full conspiracy theorist with me. I said it this morning. I said Bitcoin getting bid up a couple of days prior.
Yeah,
That's
everything.
a little iffy. Obviously, gold getting sold like it was yesterday. And I know gold was capitulating in some shape or form anyway. I totally get that. But again, it comes down that hard before that news. Okay, right? S&P, you had that move down on Monday, right into the close. All of a sudden, the market just gets bid, to the moon. I get a 100-point rally. Next thing you know, we're almost 300 points off of the low, and or 200 points off the low. And I was short yesterday. I bought puts not right before the close, maybe 30 minutes prior. And so I had to, eat it. I've been a bear too, and I saw the opening on Globex. I'm like, dude, this thing could grind up 200 more points in the S&P. I'm like, I got to get out of this. And I was telling everybody, if you ever had an options position, long puts going into a headline and a Globex reopen, you could put a Walmart between the bid and offer. It was not the most enjoyable experience. I just had to get flat. Luckily, it wasn't too big of a position for me. I still, took it a little bit. But ultimately, I look at the market and go, yeah, I want to have that contrarian feel because I do believe it's now been played out. But everything I look at saying, maybe just not yet. And it'll be interesting to see today. I'm glad to be flat, to see what a pullback looks like and to see maybe what you do as well, because it's just a tough trade here for me now. Now it's just like I have to be flat.
Yeah, I think the reality is I don't mind being wrong, right? I just stick to the plan, and if I'm wrong, I'm wrong. And there are points in that where I accept I'm really wrong, and this is just a rally, and I'm trying to sell the rally and not sell the bounces, and it is what it is. But I don't like the events of how this all come about, and all too many times we've seen things all align. I absolutely hate that Besson is talking at 10 o'clock because it's like my power hour almost, and it's just I think he's going to absolutely ruin it. So it might be that we get a trade in the PM, right? But for me, I can't be a buyer up here. I have to be a seller. I'm a seller because I'm predominantly a seller, and everything is just telling me this can't keep going up like this, So I agree with Pharm in a lot of ways. I just like to be involved in it. I don't mind the losses on the way, because again agreeing with Pharm, I probably should bring Pharm back on it, to be honest. But when you get that trade that runs, it can really run when a move like this starts to get retraced, because everything starts to just trickle. All the dominoes start to fall, and then this retrace suddenly isn't a retrace anymore, and it's actually just a full reprice, and that's like Havana for me. We go to Hawaii, order some cocktails, and chill out and let the market cool off. So this is my dream. This is my dream, to be honest, Ellie. As soon as we gapped up last night and I saw it, I was like kid at Christmas, couldn't sleep, wanted to see what was going to happen during London. Took a small little paper cut during London, got stopped for some slight profit earlier around 7. I wanted to see this retrace all the way into 7 a.m. low. But yeah, I mean, this will retrace, and it's just a matter of staying patient, sticking to your rules, playing the model when it appears, and I guess in my head, tunnel visioning away from the drawdown, because that can really mess with the winner that will pay for all of the little small paper cuts.
Yep, no, I agree with that. So before I let you go today, like I said, plugging your 11 a.m. giveaway. So everyone, make sure you stay tuned throughout Kane's stream. Last week we got 1,000 likes on the stream.
Damn.
He went to Leo's school of streamer boy, and you did it, Kane. It was amazing. Leo has been such a great mentor to you on the streamer side of things. It's been really, really impressive. So to see your growth and to get to 1,000 likes like that, it was amazing. So we can't wait to do this giveaway today at 11 o'clock. I'll be watching you trade throughout the morning. I'll be in there and chat, and of course, Shai will be in there. Make sure you give her a little little bit of a jab for her birthday today at 10:30. But be nice, and everybody else. I'll see you guys in chat.
Appreciate you, Deli.
See ya.
Chat, how are we? Okay, so giveaway. I have strict instructions for the giveaway. We were going to guess the price of 10 o'clock, but we're not. We're going to guess the price of 11 because Beston's presser at 10, so it could just mess things up a little bit. So later on in this session, we're going to call out for like a guess the price of the 11 a.m. open. And if you're right, basically the closest person wins. And if people have the same guesses, then I don't know what will happen. So don't ask that. But that's what we're thinking of doing. So I just realized that I announced this way early, but it is what it is, and we'll go over it again at 9:45. But at 9:45, we're gonna start everything will go in slow mode, and then the prediction for 11 a.m. So yeah, we will go. I jumped the gun. Shabs are gonna absolutely kill me for that, but we'll do it. So we pushed it an hour, so it kind of screwed in my head. Anyway, like I already said, I kind of want to fade this today. Not really looking to fade this prior to the open. I want to see the open push higher and then just sell back below the opening range. I agree with Deli around the opening range comment. I think days like this, the opening range really carries a lot of weight. If we break higher and hold it, then it's something I probably won't look to fade. And if we break higher and play back to it, I'll look to fade to it and risk off, and then we'll go from there. Anyway, chat, how is everyone? No, Leo, like boys and girls, we joke around that Leo is. Well, actually, we don't joke around. Leo is just a full-time streamer now. He's fully on board with the streaming. So, and yeah, last week we got 1,000 likes, which reminds me, you should like the stream. You should, because if I don't know, maybe just maybe the giveaway is good this week, we'll do another one next week. Maybe, I don't know. We won't do it though if we don't get enough likes. That's for sure. That is for sure. We kind of got to sit on our hands till the open. So yeah, so the joke is that Leo is a streamer and that he taught me how to stream. We went influencer mode. And then we got 1,000 likes. That's the joke, but it doesn't actually it's not that funny when we have to explain it. Maybe you should tune into all the streams. Just maybe. If we hit 2,000 likes, yeah, maybe we just sell out and go full-blown influencer. I don't know. I don't think we will, though. I don't think you guys have got it in ya. We'll get 2,000 viewers to get 2,000 likes. You know what I mean? Crazy. Yeah, look, full transparency, I'm actually expecting to take a bit of few paper cuts today. You know, listening to Pharm, Tanya, and obviously Deli speak, days like this are really hard to fade. I personally don't mind it because I don't actually mind the drawdown from taking those small paper cuts, and some of those paper cuts can actually be quite big. I don't mind the drawdown from it. So yeah, so we may look to scale in and out of some trades today. We'll see. I don't really like this current price action. Don't really want to fade this. So this is obviously just going to push higher. And I really want to fade that pain, that like euphoric breakout that everyone gets excited about. $2K likes, 100 contracts short. Yeah, I don't think we have the margin in the account for 100 contracts today. Maybe another day. We'll see. Maybe like 25 contracts. Dump right at the open. Yeah. If we lose that opening range, it could just free fall. Well, free fall is probably an exaggeration, but you know, a good push lower. We'll see. We'll see. See, for me, this is an area that just I like, but I want to see it do this. That is like an area that I can probably get short in because of this impulse up, impulse down, probably another impulse up. Just want to see impulse down and then hold. And if I'm wrong, we just stops above. I did actually take a small short here. before the open, and I just want to see this impulse. I don't mind. I want to be right or right out. You know. The boxes I have, I don't really have any boxes. I'm just playing 50% of this range sits around here. We didn't touch it. We didn't touch into it. Not even here. Didn't play into it. So we push higher. I just play for this retrace of this move. And once we retrace, take some form of like solid liquidity, maybe like a 4-hour low, which, you know, we haven't taken since, God, a while ago now. Oh, yeah. 2 o'clock on Monday when I actually caught the bottom of the week. So maybe we just clown on me for paper handing the bottom of the week trade. I longed it from here to here, which was a great trade, to be honest. But I paper handed it because we're up 1,000 points since. So if only I had hindsight, eh? The open rips on NQ. That is good news for us. I just don't want to see it rip too hard on ES. Jeez, this is a massive opening range though. 44 points. They are really selling this on ES though. Oof. This divergence is a little bit disgusting. NQ rallying, ES dying. I favor ES here. I don't know if I can sell this. I probably want to see a break lower. Confirm some sort of break. Resell. We'll see. Give it a couple of minutes. Let the range kind of settle out. Let me guess. Geordie comes in and goes, let me guess, Kane, you're waiting to fade the bulls. Man, just that obvious, aren't I? Bias long term, bullish, because that's just how the market works, right? I do want to see it push at some point, just not today. Like I said, I don't really like. They're going to struggle to get above this 19,000 level, aren't they? I have this 19,000 level marked. I think it will see some sort of resistance here. It's not number sensitive like ES, but yeah. I use TradingView, I know. TradingView is it's a bit slow today. Okay, everything just got swept at the open. Don't want to see this close above, really. I don't want to see a good closure above here. ES is just flipping. We'll see. We'll see. Everything is what I kind of really want. The indicators on the right hand side of the chart is just the fractal model from T-Trades. It's just I have the standard deviation enabled on here, or the deviation. Oh, why was it? Oh, it's over here this way. I only really care about this. I just haven't filled it out. Oh wait, we need to be real streaming, boys. The anchored VWAP from 9:30. Well, there we go. What about from 6? What happens? Let's get all the VWAPs out. This is how we do it, right? Oof, this one's so far away. What does this mean? if we lose this one, we go to here. Is this how we use them? The VWAPs, the VWAPers. I know I said I'll trade oil, but oil is currently tanking, and I missed the move up here. A couple of people caught shorts here. I personally missed it because I suck, apparently. It's really nice up here. Like this sell-off. This candle takes all liquidity. This candle opens, sells down. This one sells down, trades up into here. Yeah, it's really nice. Really nice to sell, actually. I didn't trade it today. Oh, yeah. We are so high up and the buyers are struggling. What's going on? Okay, it's 5 minute drive. 5 minute drive up, sell back down. We can kind of look to position in that sell maybe. Oof, that is horrible. We'll see. We'll see. It's gonna be a hard day. It's gonna be a difficult one, especially when I'm so bearish and the market is so bullish. It's like fighting, you know. Surely this is no. Why does this appear here? Oh, the buyers are already underwater. No, I'm kidding. Okay, this could be it. I'm gonna sell 3 here. I'm gonna tight stop. It's like 20 points. It's tight for me. Then basically I just want to see this break. Oh look, everything lines up. Oh, I'm just gonna leave without us. Come on, just a little drive. Just a little drive is all we need. Get us into this. We can add on the way down, potentially. Everything's lining up. Yeah, this is really nice, actually. This 15 minute looks horrific. This hourly also looks horrific. This is all teeing up for a nice sell. However, we're not in it, so it's not looking too great. Actually, I think I may add size on here. 4 was 10. 4.5 was 28. 15. 11. I really like 11. It's really not gonna come back for us. This will ruin my day. So if there are any balls in the oh, oh, that also ruined my day. My stop loss wasn't even set correctly. That also could have ruined my day. What just came out? Oh, that could have been really bad. Yeah, could have been horrific, actually. It actually still was pretty bad, in all honesty. So what was this news? Does the chat want to enlighten me? Because I cannot... I quite literally was liquidity here. What happened? Yeah, I did get kind of slipped to hell. And my stop loss wasn't even fully set. It was... my stop loss was set for 4, and I was short 11. So that was a sucky one. It's the name of the game, though. I need to know what the news was before I actually continue. White House considers slashing China tariffs to de-escalate trade war. Wall Street Journal. This is where Trump comes on and says fake news, and we just do nothing. Oh, that's really annoying. Oof. This is a 15-second chart, by the way. We rallied 200 points almost from the low to the high, and I got squashed. That 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 hurts. Oh well, we go again. This time we just make sure that our stops are set correctly. Slippage absolutely widened here though. I definitely got slipped to hell. It's old news. So Tracy, what is the news? What happened? What is this? Please help me. I got stopped on 4 and I was short 11. So I was carrying 6. 7, yeah. No. Carrying 7. Had to close. Didn't even look at how much it was, which was fine, but we'll look at that later. Can't imagine it was nice though. Ugh. Oh yeah, no, I'm not stressed too much. I had to manual close, yeah. Has anyone got the job advert for McDonald's? I might need it later. Okay. Yes, Nick, how are you? There's not much up other than the market, and I just got slipped to hell on 6 contracts. So it was in the new, oh yeah, likely coming down between 15 and 6, but no source stated. Okay, so it's fake news. We just need to wait for Trump to hit Truth Social and say, not true. Or Besson says something at the presser. I don't know. We'll see. Anyway, can we get the likes up because my balance is down, so we could just maybe do that. That would be great. Thank you. Yeah, what a F you candle. I think they took it personally. They saw my short order and was like, "Yeah, great." Oh, guys, I'm making a lot hearted of it, but it is what it is. It was my own fault. I yeah, there's so much for Hawaii. We're going to McDonald's. Best presser is bear bait. Yeah, maybe. Who knows? That guy can't calculate tariffs. So I'm not sure he can speak at a presser. Just my opinion, though. I don't know how much I lost on that trade, and I don't really want to look. But what I do know is I closed about here, and that's about 80 points. Someone else can do the maths, but I'm not going to read it. It is what it is, guys. It's money at the end of the day. The money that I was okay putting it on. I just probably wasn't okay with that much. It's almost double what I wanted. Completely my own fault. Got no one to blame but myself. This is horrible. What is this? Nothing really changes for me, right? Like we hit that 19K level. We're basically trading back towards it. Either we're going to use this as springboard or we're going to look to trade below it. ES basically topped out at 5,500. Yeah, we just wait now. This is really, really horrible. That's a 17K slippage loss. Nah, it wouldn't have been that much. I can check exactly. I can check exactly the exit on it. Give me a second. Oh, guys, I didn't even get slipped that bad. No, I didn't even get slipped that bad. It was like a 9K loss. It's a lot better than I thought. Let's say that much. Okay, anyway, um, we mentioned it at the start of the stream. We are doing a giveaway at 11 o'clock. We hit 1,000 likes last week, so we're going to do a giveaway. The chat will have gone into some sort of slow mode, and we are going to basically guess the opening price of the 11 a.m. candle. So we've got about an hour and a half, hour and 15 minutes, to guess the opening price of the 11 a.m. candle. Um, I guess the close of 10 as well, unless we obviously have some insane slippage. Um, all entries have to be in by 9:55. Is it 9:55? Yeah, 9:55. So yeah, so we've got, sorry, you've actually only got 10 minutes. You've got 10 minutes to guess. So for the next 10 minutes, chat will be in slow mode. You've got 10 minutes to guess the opening price of 11 a.m. Predict best speaking, so it could go up, could go down a lot. Maybe it would do nothing. I don't know. You guess. Get one guess per person. I imagine if you enter multiple times, you'll get voided out. And then we'll announce the winner after 11. Good luck. 11 a.m. You go check the pinned message. Failing that, check the pinned message because the pinned message trumps whatever I said. Okay. This is the one thing I don't want to see is a slow grind. This is like this is mental torture for me. The slow grind stuff. Oof. Keep guessing, guys. One guess per person. Just keep guessing. Entries close in about 8 minutes. We'll go from there. This is just slow grinding up. We're not really missing anything here. Whilst you're guessing, you can like the stream. Who knows? If we get to 1,000 likes again, maybe they'll do another giveaway next week, so you'd have more chances. I don't know. I don't know. Let's just hope I don't get slipped to eternity next week. That would be embarrassing. Oh, the slow grind is gonna mentally torture me. Just look away from indices whilst nothing's happening. Oil also spiked. That's not a great sign. Nah. Yeah. I'm like Forex. Notes retracing. Indices running. It's not looking too good, bruv. Hmm. Bitcoin 95. Natural gas retracing. Oil retracing. Really, we want oil to just do this for the next 5 minutes. Spike, then sell lower. Oh, this is horrible, guys. This is absolutely horrible. This is not the fading that I wanted to do. The slow grind stuff is horrific. Beston's going to get on stage on the presser and just, I don't know, market's going to hate it. Yeah, 2020. I think you could make any excuse for why it jumped. The reality is it jumped because the Wall Street Journal said China tariffs are cooling off. I mean, yeah, you can say that it touched the VWAP from 1991. The reality is that's just not the case, and it's just conflicting bias. But if you choose to believe that, that's your choice. It's like, did the Trump tariffs happen at the right time, or was it to do with Trump's tariffs? I imagine the market dumped 10% because Trump announced tariffs. Some would argue that it touched something somewhere that they like. It jumped because someone hit the buy button with a ton of contracts. It also jumped because bonds could have just priced, which they did, right? Or not, yeah. I don't really like they both went up though. That seems a bit. And now the one's retracing and one's just pumping. It's not looking too good. I think we got the fake out, the real move. I would still interested in fading. I am personally. Look at this. By the way, I put the VWAPs on my chart just for other people, not really for me. It's 15-minute. Oh, this slow grind's horrible. It just means I can't get into this. I need to see like a violent push higher. Otherwise, I just can't play it. There's just nothing in here for me. Yeah, it's going to be a slow one. Am I patient enough for proper shorts? Nah, I'm extremely impatient, to be honest with you. The V in VWAP stands for volume. Yeah. Anyway, last roll call. 2 minutes out. You got the guesses. Put them in. We're at 568 likes. Let's get it above 600 in the next minute, and then we'll push on for 1,000 later on. Algo's backed up the bus for the buddies to get on. Let's just mark out where you think the market's going up from. Let's just do that, just for fun. Just for fun. You can have a nice pink line. Okay. $19.08. Where are we at now? Cool. People think it's going to just go sideways for a whole hour. We're guessing the opening price of 11, but I think you just missed it. Or maybe not. I don't know. I don't know. I didn't make the rules. I just say them, and I messed them up because I told everyone about the rules an hour earlier. Oh, it might be 10 a.m. It's not 10 a.m., is it? Best for 11 a.m. Eastern time open on NQ by 9:55 Eastern time. One guess per person. Winners will be announced after 11. It's definitely 11. I'm gonna guess, right? I'm gonna guess that at 11 we're trading about 18,800. There you go. And if I win, the end. Nice. I do like this. The reality, though, is we look to short some of this move. Besson comes on and says something against us, and we get run over. So we just have to wait for him to settle in a bit, I think. Where's he speaking today? Does anybody know? Well, I know a new home sales, yeah. Yeah, where can I watch it is the real question. I want to see if he says anything silly. We'll see. Times News YouTube. Okay, sweet. I'll put it on in my ear. Yeah, I don't really like this. I don't really like this. Like, look how well delivered this is. It's crazy. That mark was quite literally the EQ of the range. What are the chances of that? RB. Look for SM divergence with RB. Oh, sorry. Gosh. Yeah. There's also another one. I think it's heating oil. I don't have that though. I don't use that. don't believe me, do you? I don't believe you what? What did you say? Sorry, I didn't see a message. Let me scroll up. Vincent. What did you say? Tell me what you said. Are we out of slow mode now? Or are we back in? Are we still in slow mode? You can stop guessing now, guys. The guesses are in. The guesses are in. You don't believe me, do you? I don't. Tell me what. Tell me what I don't believe. Most of my trades are on the 5 minute, but like this is horrific. Like I don't really like this 5 minute right now. I don't hate it actually. Here we go. 10 o'clock. There's just a massive spike in volatility. What's that about? I wonder. I imagine it is something to do with this specific level in general and got nothing to do with Besson stepping on stage at some press conference in Europe and somewhere in Europe. Is it in Europe? I don't know. It's also news, yeah. Talking to a guy asking Pepper Oil, don't shows it, yeah. So what was the data? Let's check the data. PMI 57. Good for currency, so good for dollar. This one, I think it just came in flat if you even them both out, no? 10 a.m. Well, that fucks me. Actual. So there's more homes than forecasted being sold, new homes, which is good for dollar. So dollar took a leg up. Indices standing still. The 10-year is well, yeah. The fuck me. Gold hates that. Euro hates it. Everything hates it apart from indices. Why? Why? Oh, indices are starting to hate it as well. Thought I was losing my marbles. Besant is speaking. Do I use delta and footprint charts? No. This is about as volume as I get. Ready? Boom. Oh, wait. It didn't even change. Yeah, it did. Here you go. You can see all of the large fat candles. This one's skinny candle. See that? No, I don't. Oh, I've gone to the wrong one. Oh, we are just stuck. Today's market's a mess. ES took previous week high. It did. That's insane. That's crazy, actually. Sell it. Sell it all now. Oh, it really did. It really reached all the way up there. That's crazy, actually. Where can I get short in the 10 a.m. wick? Nowhere, because the wick existed for less than a minute. Gosh. Yeah, it's a form thing. I do think it's going to start to sell off a little bit. Not going back there. What, 10 a.m.? Gosh. Algos coming back for friends. Let's just write all the comments and all the pricing. Not going back here. Let's see who's right and who's wrong. We gotta have some fun. Gosh, this price action is boring. Oh, you changed it to 10 a.m. highs now. I never said highs, so we all like to form fit, don't we? It's crazy. Yeah, I see that he's live. I'm not listening to him though. We're just stuck. We're stuck. We need Besson to say something magical to get us out of here. Either up or down, I don't mind. I just don't like range. Don't like the range. ES is already deviating the 10 a.m. high. Not looking good for not going back here. How do I plot the fib? I just used the fib retracement tool, and then I just measured these projections. People like to call them standard deviations. They're just projections. But I just, yeah. Not to the top highs of the wick. Yeah, I mean, obviously, I would also hate that as well, but I would like to see us get above 10 a.m. open. Okay, I need to have Besson in my ear. I need to know what this guy's saying. Or Besant. It's heading down to your 11 o'clock guess. I believe you, buddy. Real-time news? Real-time news? I think you're gonna need like a Bloomberg terminal. Everything's delayed. It's so funny watching these live streams have 6,000 viewers. Would you short the 15-minute if it inverses? But that just aligns with the opening range. So if we do inverse this and we finish here, I'm basically shorting the support of the opening range. And if we trade below it, I'm shorting the midpoint. So at that point, it's like, what am I actually shorting? Okay, so we went back to the 10 a.m. open. Bingo. The algo guy is winning right now, but I don't know how for long. Fuck, that was hard to say. Don't know for how long. The only real-time news comes from inside our government. Yeah, I mean, that's physics, right? Everything is delayed after someone mentions it out of their mouth, right? You've noticed more slippage. I mean, when volatility is higher, yeah, you will, because you have to go through the API, right? So you have to factor in that millisecond delay. And if that millisecond delay means that we pumped 50 points, then we will. But that's not a broker problem. That's a clearinghouse issue. So who knows what a clearinghouse is? That's the real question. Yeah, I trade off hard time frame bias. I'm a billionaire, trillionaire. Don't insult me. Come on, that's embarrassing. Trillionaire. Yeah, I hate this range as well, to be honest. Yeah, we just drop until Kingdom Come. Maybe, honestly, at this point, yeah, I just get slipped to hell. I'm pals with me and Musk. He calls me up when he wants some money. That's probably is, he's that kind of guy. Other than that, he's too busy, trying to get to Mars and all sorts. And so are friends. My friends check in on me, you know. Oh, like Chris Hemsworth. Oh, trust me, mate. I will take that compliment. Thank you very much. End of conversation. If ES gets above 5,500 going straight up, the EM session might be the move. Yeah. Time to fire Yuki Tsunoda. Maybe. I just think he's got a really hard time, right? More like Korg from Guardians of the Galaxy. All right, Jesus. No. Big greetings to you from Egypt. Appreciate you. What do I think about the relative equal highs on the 4 hour? Take them out today? I don't know, honestly. The relative equal highs on the 4 hour. What, up here? Yeah, go back to 21K in an instant. Oh, I don't know about that. Crude. Oh, it's coming up, isn't it? Remember, guys, when Tracy comes on, we got to wish her happy birthday. What the absolute happened? I imagine the crude number got leaked, like it always does. Tracy, did the crude number get leaked? Tell us, did the crude number get leaked? Oh, okay. Several OPEC members want the group to approve another accelerated oil output increase for June. I tried to short the opening range midpoint and got absolutely crushed. But absolutely crushed. I only had my stop in for 4 of the 11 contracts I was short, and I got slipped an extra 30 points on the additional 7 contracts. What was the question, Alex? Which short did you take before coming in the stream? Oh, we shorted. I shorted this 1 minute here. We shorted here. Our targets were -2 of this leg. And we got stopped basically here, right here. So we made like 50 ticks ish. No, 20 points. But ES actually hit this, so it was kind of my own fault for missing it. Okay, what I would really like to see now, right, is I would like to see the 15-minute candle open up in literally a minute, spike this high, leave this high in place, and then we can look to sell and we can stop above here, because then this is just perfect. That is something I could look to play. Mm. No sound? Is my sound gone? Okay, sounds good. Okay, we've got a 15-minute open. I just want to see this make a higher wick, then we can look to potentially sell it down. This VWAP's kind of looking a bit, it's kind of looking like it's actually holding it up. Uh-oh, I just jinxed it, didn't I? The anchored VWAP. Heavy divergence on the daily chart. Look out. Look out. This is a bear market. Pow, pow, pow. Yeah, maybe they are. I don't know. Should we long right now? See what happens. Market will dump. Do everyone a favor. I think this is the only thing that we can really look to play today. Play below that. There's nothing in here. This is so well balanced. So the guy that said we're not coming back here, we came back there. The guy that got bullish at this level basically said that algos are going higher, is now underwater. I got slipped. It's not a good day for us, chat. Is it? Anyone else want to make some brash predictions that we can also add to the list? It's a really weird day, yeah. Your prediction is 0? Okay, well, there we go. Aliens land today in Texas. Retrace to midnight open. Yeah, I wouldn't mind that. Bloody hell, that'd be nice, actually. Going back up and failing to go higher, I think says a lot. Fade highs, move stops, and wait for the dump. Not looking good, boys and girls. I really don't like this. Funds will close green on the day. That are long, even if we go much lower. Last night's opening range. Lakers win the NBA finals. Celtic win the NBA. Mm-mm. I hate this price action, boys and girls. I hate it. Could Besson just say that he's going to increase the tariffs to 7,000,000%, please? Oil puked. Yeah, I saw that, Tracy. Yeah. Okay. This is wrong. This is wrong. I may get a chance to short the midpoint again. I think that's the only real thing we got here. That 15-minute closure in 10 minutes below this level. Very, 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 very boring. Sorry, we're in a range on a 4-hour time frame. We are bullish. That would defeat the object of being in a range, right? If we're in a range and we're at the top of the range, we are quite literally the opposite of bullish. So yeah, incorrect. I think people that make enough money in one day for the week should definitely not trade for the rest of the week. I think it's sensible. Pock shifted to the highs. Oh no, can't. Not you again. I mean, I like the fact you're engaging, but don't like the fact that you consistently tell me everything about order flow when you know I don't use it. 30 seconds inversions I like to use when it's 10 a.m., 15-minute, like all of those. Like I don't mind them as long as they displace very shallowly. Like that shallow displace, stall, like displace, stall, and then reclaim and then trade into it. I don't mind taking it, but I always just take it smaller risk. Why did London buy this up? There are also 1,600 people in the chat. Yeah, okay. Fair enough. Fair enough, Con. This is heavy. Heavy. No? Have I got GC data? It's Comex, and actually, no, if I do. No, I don't. It's delayed. I didn't buy Comex data. That, whatever. I just don't like this because this is just going to potentially. What time? 18, 21. Beston's concluding his interview. I really think this is just fake based on this, but I also don't particularly want to fade it too much. Here we go. It's just concluded. What's going to happen? If this does nothing, then gosh, we may actually, whoever guessed current price action, I think we probably called the 11 a.m. guess around it, didn't we? Yeah. Oh, he's going into a Q&A with these guys. God, he loves a buzzword, doesn't he? Yeah, opening range was a good buy here. The algo goes right again. It was that here. It just looks so bullish. Honestly, I can't fade this. I just need to wait for the 15-minute open. But ultimately, we have sold out of here quite aggressively all day. But it's like, we are just stuck in this range. Really, what I want is I want to see like the 15-minute candle open, take a high like this, deviate, and then we could replay the reclaim and just get bearish here, bullish here, bearish here, bullish here. We have to play the range. It's going to be absolutely horrific, and it's 100 points, so it's not too bad actually. There'll be an afternoon setup. Seems like the prediction predicted a range day. Yeah, true. The indicators on the chart are just, they're printed right now. These are just the 15-minute candles on the right. Like, look, this is what they look like right now. When I go to the 1 minute, it's the 15-minute candles. Then when I go to the 15-minute, it's the 4-hour candles. So I can tell you that this high is the 4-hour high. Yeah. And what I want to do is I want to wait, this will be the new 15-minute high in 38 seconds. So really what I want to do is I want to see if price will, and then start to reclaim stops above. That's like the only real trade. I don't really like it too much either. ES looking weak though.
Hey, Kane.
Hey Tracy. Happy
Creeping in on
birthday.
you. Thank you. Been a rough day. So we'll see. We have 2 seconds. We'll have crude numbers. I'm impressed that you had your crude chart up today. And so crude inventories, we have plus 244K. Expected was 1.6 million. Distillate gasoline inventories minus 4.476 million. That's a huge draw. Distillates minus 2.353 million. Another huge draw. And for some reason, they don't have Cushing inventories posted yet. The data is crazy today. So slight uptick in crude. Decent numbers. Those draws in gasoline and distillates are the most important. So, what do you? How you taking the the crude data today?
Honestly, I'm really shocked about this crazy dump that they had. I don't actually understand what happened. The news that drove it there. I understand obviously someone said something about it, but I didn't actually understand it.
Yeah, so we had 2 dumps this morning. One was Kazakhstan came out and they said that they can't cut their oil production and they're overproducers. And then there is a leak supposedly from Reuters of quote unquote sources, unnamed sources, that said that OPEC was planning to increase production once again for June to be discussed about in the May meeting. So it's just hearsay. Reuters has done this before, but the market obviously reacted violently to that.
I mean, this is a big move in crude, right? I don't actually see it move too much, but I don't watch it move, so it's probably the better term. So this is a big move, no?
Yes, that was a pretty big move.
Yeah.
For like 2 big dumps on a day, basically. So overall, if we look at inventories, we've got gasoline is still 3% below the 5-year average for this time of year. Distillates are 13% below the 5-year average, and total crude stocks are still 5% below the 5-year average. So fundamentally speaking, this market's still tight.
Okay. It's good. Cheers, Tracy. Do you want anything nice for your birthday?
So I probably will have a drink in hand somewhere as soon as hot commodities is over at 2:30.
Don't blame me. Don't blame me. Yeah. Well, enjoy. I didn't trade crude today, so I apologize. But I did buy the data, and I didn't trade it for the simple fact that it dumped before the open. We'd already retraced quite a bit.
Yeah. Next week. I'm impressed you got the chart out. So.
I did get it out, yeah. I did actually eye it up all morning. So, yeah, I just didn't take the sell and then it ran. So, next time, maybe?
Next time.
All right, deal. Next time.
Cheers.
Cheers, Tracy. Damn, we took the high. The high's not in. Data lows. Again, they're up 110 points, targeting data highs. We've gone nowhere all day. Quite literally nowhere all day. Actually, that's an exaggeration. We've gone up quite a bit, but like, we're up 4% on the day. It's crazy. Might have to just call it a day. Anyone got any questions? I'm basically just playing a range right now. What's the indicator on the right? It's just the power of three indicator. That's it. I've said this like quite a lot of times. Am I down on the day? Yes, mate. I got slipped really bad. Like 30 points on that 937 candle. We move. How do I mark the opening range? It's just the first 30 seconds of the open. I like divergence because it kind of suggests that one asset is either weaker or it needs to catch up, so it can keep you out of trades, and but it can also be a reason to get in them. But once you do get into them, your invalidation is, say like you want to trade ES right now, so you just want to short ES here, whatever. I'm making this obviously, but say you don't want to see this high because they reclaim. So we trade lower and you want to short this here. You don't want to see this high taken regardless of this high because NQ took this high. So for me, the way I interpret it is like ES is no longer drawing to this high. NQ is pulling ES up. That's my interpretation. I know some people don't like that. That's fine. But that's how I typically play it. This is good, actually. This is really good. Like a push higher around half past. Because now we have something to trade through on the way down if we come down. So now we just have to wait for confirmations. This is really good. I like this a lot better than before. But we're about to hit that 5,500 level on ES, and if we do, just know that we go straight up. Like there's no like holding around. We're gonna go straight up. So just be careful. Sing coming. Straight up. Oh, can't wait. We're gonna skip over 6,000 in ES and probably go to like 7K. So yeah, it's gonna be a big one. It's gonna be like a couple of $100 trillion printed in the market today. Straight up. Like you see this, it's gonna look like this. This is how the chart's gonna look. Crazy. Screenshots, guys. Come on. Did we hit it? It really doesn't want to trade there, does it? Oh well. I like this. I like this setup a lot more now. You totally did screenshot that, yeah. Bro trying to rug pull us. No, I'm just gonna skip over 6,000. Do I watch Dixie? Sometimes. Depends. Depends what I'm really looking for. Like when I start to look at like ZB and ZN, and then I compare them to this, it's like when they all decorrelate, it's like, don't touch it. Mm. Mm. Come on. Come on. This is just where the exact same thing is just going to slowly die off, and then we get some news candle and we go through. However, the good thing is I have my stop in place for all 5 contracts. I'm just going to get bullish down here. So I'm looking at short 19,145 on NQ. If we get a closure in the next 2 minutes below 1230 ish, I'll short that level instead. But ultimately, I want to see this push up and now trade off. So we have 2 minutes. So yeah, like 142. If we trading below this line, then I will move my order. And then yeah, and then ultimately I'm just looking to play the range. Get bullish here, get bearish up here. That's what I'm doing. I'm not really doing anything other than that right now. And if this confirms and then confirms a 3 minute, I'll add. We'll see. We'll see. Could be good, could be bad, could be horrible. So look at the 5 minute. No, I think we're good. Come on, do not do it. Just tag us in. I'd rather be wrong than not in it. Lordy, lordy, lordy. Oh, see, now this is where it's actually just going to run without me because it could just play off at this level, or it might not just play off any of them, and we just have no way of getting into this, which would suck. Great. Today's really not on our side, is it, guys? It's just a fade me kind of day. I wouldn't, not necessarily. Maybe still, but we shall see. We do have the good thing is that we do have a 50. If this 15-minute close is like this, it is what I was looking for 15 minutes ago. I would see us trade above this high and then create a swing formation at this range high, and then sell back down into these lows. Then we could just trade these extremes to these extremes and just expect an inside session. Maybe recoup some of that slippage. Okay, so this was the first in. Whoa. This was the first one we wanted. This is what could play now. Is in play. Yeah. And then there is also this one. These are the three levels that I want to see respected in some way. This is M3, 3, 3, 1. There's no 5, there's no 15. And we have 2 minutes to sell lower, or this candle will most likely expand. The thing is, I don't want to sell this one down here because this is it's a 50-point stop. And my only invalidation is this high right now. So I have to keep it keep it PG. And the reality is you can sit there and be like, downside your contracts. It's just not the way I work. Yeah, look, guys, I'm not gonna lie. Getting stopped out the way I did was really tilting. Like, it wasn't nice. Yeah, like, um, but ultimately, I have no one to blame but myself. Like, I was messing around with the orders, and I had a resting order with a resting stop loss that didn't cover my resting order. You know, it was completely my fault. So the slippage is completely on me, and I will eat it. Yeah, I don't really like market ordering too much anyway. But this is actually starting to respect now. Really, what I want to see, right? So I want to see what ES did. A drive above this candle high into here and fake selling pressure here. And then drive lower. And I won't chase it because it's silly to do that. Anyway, we got any questions? We got the trades in. Nothing really changes now, so going short is the next best play, but still bullish. Why would you sell stop it? I don't. I could sell stop this, but like I also don't want to, considering that the Besant is just sat talking on a presser right now, and yeah, got partially filled 3. Why didn't I go short on the 1 minute? Because I missed it here and set my order here. The 15-minute, that's what I want though. I want this 15-minute close. Just wouldn't mind it driving, and then we can sell this down on the way through. If they sell it down, it just means sell into the book as we start to travel lower. Just to 2 invalidations. Come on, get the final 2. There you go. Now I'm really good. Now I'm okay. Just this is exactly what we wanted all the way down here. That 15-minute open up, close, open up, take the high, take some liquidity up here, close back below, and then yeah, the 15-minute just confirm. Oh, it didn't do it. Why am I just making it up? It didn't do it. I was looking at the wrong time frame. I looked at the 5-minute thinking the 5 was the 15. That was silly. It's okay though, because I would still be in this one when I stop here. So it is what it is. I actually just made up the time frames. Take a walk. Yeah, I've got a giveaway to do in like 12 minutes. Yeah, I'm currently short 5 at 19,128.50. If I'm expecting lower, where do I normally look to trade? So let me give you an example. So this was open at the open price, right? Price opened, trade higher, close lower. So this is 10 a.m. open, right? We can just mark it out of this right now. This is 10 a.m. open. Where's 11? Where's 11 open? Oh, we're not at 11 yet. Where's the 15? So let's go to the 15 here. And then if I mark out the 15-minute opens above here, I'm short about all of these opens. So from a mean reversion perspective, the probabilities are in my favor. Do you know what I mean? I'm shorting above all of the opens of these candles, which is just how I like to get positioned. So yeah, and also we respected that 1 minute really nicely here, and then there is obviously 1 minute on the way down, but then at 3 minutes traded into it, respecting. Now what I want to see is I want to see us trade into this area, respecting. And then also when I'm trying to trade that higher time frame candle, is that 15-minute candle looks like this. And now if the 1 a.m. if the 1 hour candle can close below this high, and I'm positioned in that candle, that wick, 10 a.m. opens, trades above 9. If I could be positioned in this wick of this candle and we drive lower, say down here, whatever. In hindsight, I'm positioned in this wick, so I'm trading the extremities. So it's like I don't need to then sell, you know? And if we close on the 5 minute, if we close below here before the open, the reality before the 11 o'clock, then 11 o'clock should sell down. Yeah, we'll see. Scaling out more. Yeah, I don't really scale. The only time, why would I go break even at 10 o'clock here, this 10 o'clock open? Does anyone like get my logic for it? And obviously we've done this a few weeks now, but anyone understand why I would do that? Now I would just go break even. I don't want to see this traded into. It's less than that's a point and a bit, cover some fees. No, I don't know if we fill the gap. I don't care about the gap. Yeah, the 4 hour candle flipped. Yeah. So when we trade in here, this candle flipped bearish, and now if it drives back up, it's just buyers below the open, and I'm wrong. You know, that's basically my point, where I accept that I'm wrong. I can't believe ES traded into previous week high. That's insane. I mean, it's good for us. Well, good for me. I say us. It's good for me. I'm in shorts, and ES traded into that extreme that I like to trade away from. NQ showing weakness, not being able to get there. We're short NQ. We're short the weaker asset. So yeah, overall pretty good. We boys, right now we're just not going to lose money on this trade. We haven't made any money on it. Yeah, that's it. And girls, sorry, and girls. I entered on a level that was basically hit. I entered based on the 4 hour candle trading above the previous 4 hour candle high, the hourly candle trading above the previous hourly high, and the 15-minute. I was trying to get positioned in this as a swing, but the moment that we trade into that open and below this 15-minute low, I don't want to see this buy back up. I want to see momentum kick in and trade lower. And if not, I'm wrong, and I just get to, you know, slippage up here is like 1 point-ish. So I just cover it, 2 points, and now don't pay fees on it. It's risk-free trade. And if we come all the way back up here, I'm wrong, because the 4 hour is most likely set to expand. And I'm just trying to get positioned in that 4 hour candle. That's it. And then we just want to see this 5-minute close get close through now. I mean, this is basically just how I do it. Is there a 15-minute? No. And that's it. And now if we close below here, I'll just trail this to here. And look to do that. Sold. So yeah, it is what it is. I like this level as a sell down. We just gotta let it happen. What would be my standard deviation targets? That is a very, very, very good question. This move was so solid, wasn't it? I mean, ultimately, I think it would have to be push, 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 close below. I mean, this is it, isn't it? I'm just really glad that ES didn't touch 5,500. I quite like ES below 6K. I didn't want us to go all the way to 7 instantly. Do you know what I mean? The 10 a.m. open is holding strong. Yeah, it is. So look, if we look at that 4-hour candle, that 4-hour candle was flipping bearish after to grabbing liquidity to the upside. And I don't even want to hold this all day. I just want to be positioned in this for a sell down to the inside session that we've currently resided in. We haven't expanded up, we haven't expanded lower. Well, I guess we have expanded up a little bit, but we've sold the extreme, and now we just want to play that mean reversion back to it. Why wouldn't I target low of day? Because I'm just not really in the market of fading this entire thing. I don't need to. I mean, look, basically, this is the area that I officially want traded into, that 930 wick. But like the truth of the matter is, at that point, if we get all the way down here and we start to find some support and I round trip this whole trade, I'll kick myself. And if we do trade below here, I will get the option to resell this in validation where my TP is. So the only thing that I miss out on is 40 points, and I'd rather lock the money in and use the 40 points. And if I'm wrong, then I lose less. And if I'm right, I make more. You know, I don't like runners. Runners are just hoping that your target, like runners for me are hoping the market just does something silly. And yeah, okay, great. It's amazing when you catch a 400 point 30-second move. That's unreal. I agree with that. I understand that, but that creates bad habits for me. I get point greedy. I expect 400 points every minute, not every hour or every day. So I just like to be risk off, and just get out of the market at predetermined points. Move stop loss up after you break into that 5-minute imbalance. Brother, my stop loss is going to stay exactly where it is. This either runs to here or stops me out. I don't really care. Partials, take them. Take the partials, Kane. No. No. I will not. Full TPs are good for me. Am I shorting right now? Right now, no. About 18 minutes ago, yes. No. It's like I'm mimicking my nephew when he like throws a strop. No. Messi or Ronaldo? I don't know. Oh, you didn't ask me, so I don't know. Keep targets in. Put hairs on your chest. The fuck, when you catch a 6R move, got 2R from the damn partials. Yeah. I mean, that's silly, isn't it? I caught like down here, low at the low of the week currently. Let's go have a look at it. Right. When I literally longed this 1-minute inversion all the way down here, and I closed everything like here at this hourly imbalance. I closed the entire thing. If I partialed off here, this trade would have gone from being 10R, to 3R, and I would have made a hell of a lot less money. Anyway, the opening price is about to print from 11 o'clock. Who's excited for that? That's it. We just need to dump another 200 points in the next 35 seconds for me to win. So if that would be great if we could do that. Bouncing off of this. 22 seconds. Let's go. I'm trading on Top Step. No, I literally don't trade a single prop firm. I check Bitcoin. I think Bitcoin's in a really good spot. I just think Bitcoin is in that spot that needs a weekly close. If the weekly closes like this, bullish. Anyway, let's go check the opening price of 11. The opening price of 11 o'clock was 19,062.25. Did anyone guess that? Top Step pays 750K. Cool. Yo. This seems quite heavy. What happened here? I don't want to see this now just grab liquidity and rally. So I'm just getting a bit more risk off. What is that? What just happened? This was the slippage that I got caught in earlier, just in reverse. Major player just got out of position. Okay, nothing really changes here. Like I said, it just lost VWAP. Is that what happened? It does. What the absolute is that? Oh well. Like I'm not joking. This was my stop loss here. We're now 300 ticks lower. What on earth? Anyway, I mean that would have you would be covering half. I mean, Sumo, you'd be trading some random RTH gap of 700 points today. Make that make sense. More even. 600. Yeah, be covering half. I need to just come off this. But anyway, I love how you pop in at the end. Anyway, that's me done. I'm not touching this anymore. I removed them. We made money. Wow, basically just covered probably my loss. So, what am I on? Yeah, okay, Sumo. I quite literally got pulled out to the tick, but oh well. Oh no, I'll leave Sumo on unblocked on purpose. He would probably lose like all purpose in life if he couldn't troll me. Same guy that worked for the NSA, by the way. It's not bad luck. It's whatever. I mean, it's quite literally what, it's there for a reason. If we rallied fucking 400 points, I would have been like, oh, why did I not trail my stop loss? Also, we rallied from this low to this high, and we're now just chilling back at the lows. I'll get a chance to sell it again. And yeah, but that's me done. We're just gonna calculate the winner. We're gonna figure out who the winner is, and then yeah, then we'll wrap up. Okay, I have the name of the winner. You ready? Are you ready? I'm gonna copy it. Oh, what have I done with it? This is the winner. Congrats, Tim. You need to email this email address and they will take care of you. You will need to obviously prove. NT Live. You obviously need to prove that you are who you say you are. And yeah, they will sort you out goodie bag. You're also here. So yeah, congrats, Tim. Good guess. Great guess, actually. So yeah. Jim, how are you?
Good, man. Good. What if Tim is a bot?
I don't think he is. He said thanks, Kane, after seeing the message. So he did message. Normally the bots just don't say anything and expect to win the prize. So
Anyway, good job today. I love the fact that you literally articulated the setup that you wanted to see. You weren't sure you're going to see it, but you wanted to see it before you placed your trade. You waited, you waited, you waited, and then that setup came alive and you took it. I mean, that's some great planning and great patience.
yeah, it was good. I'm a little bit tilted that we got slipped at the open so badly, but it is what it is. So it played out. It was a bit slower, and I didn't expect this rally so hard, but it played out, and then we got some of the sell down, and whatever this candle was stopped us out.
Yeah, I mean, the news cycle is so brutal. I mean, the reactions to these are just like something I've never seen anything like it.
Yeah, I mean it's crazy, right? But I'm gonna look forward to going watering my grass and chilling out, to be honest with you, Jim.
Well, you deserve it, man. You worked hard this morning. Appreciate you being here with us on NinjaTrader Live, man. You were awesome. Looking forward to the next time.
Appreciate you, Jim. Good luck.
All right, man. I'll be rooting for the grass to grow. All right, folks. We're we're. I have the same thing in my house, man. I forget about it. I have more weeds and stuff like that than you could imagine. Anyway, great session with Kane. Hit that like button for sure, and congratulations on Tim for winning the guessing the price. That's pretty awesome. In a couple of minutes here, we're going to get, we have a special guest with us. Sterling Smith is going to be with us in a second. I just wanted to cover a couple of things here before we pull Sterling into the show. I just have an E-mini S&P chart up. We were talking about gap fills, right? And so I went back to the scanner on edgeful.com website just to kind of see some of the stats, right, on some of these gap fills. I was kind of like, well, how big is these gaps overnight now? What was this gap overnight? And this isn't even a weekend gap. This is like a weekday gap. So right now, the gap size was 2.55%, a huge gap up in the mini S&P. We have a fill target at 53.14 and a quarter. Now, the gap is measured again. Remember, folks, if you're using Edgeful for stats, the gap is measured from regular trading hour close last session, which was last night, to regular trading open this morning. So everything in the middle doesn't count. So that's the gap that we're looking at here. And it's a staggering gap. And we can go through other markets and see what they were. As an example, the NASI, we're talking 2.23% gap as well. Huge gap. The fill target is 18,379 in 3/4. And I know what you're thinking. Well, there's no way we're going to get all the way down there today, man. This is a trend day up. Everything is cool. But we've seen stranger things happen as well. So just keep that in mind. And this kind of number in my mind also is I want to look at this tomorrow and Friday. So I'm going to leave these fill targets up on the chart. Who knows what's going to happen the rest of the week? Maybe we'll never get there. I don't know, but very possible. Russell is another one. Gap up Russell 2.88%. Fill targets at 1899.10. And I think we might have had one for gold. Let me double check here if we got gold. It was either gold or crude. I can't remember. Yeah, okay, gold. Gold was a gap down. Gold is a gap down. And this gap size was 3.10%. So that's the winner chicken dinner on gaps. Fill target 3,387.60. So a long way to go here. The other thing that I've kind of noticed, which was kind of interesting, particularly in markets like gold, is that session VWAP, volume weighted average price. We had a really nice touch point here on gold at 120 to 130, sold off it. Again, after the London Open, approximately 5:30-ish in the morning, I think I have a 15-minute chart up, touched that VWAP again, sold off it. A little bit later, 7:15 to 7:30 candle, touched that VWAP, sold off it, touched that VWAP again, sold off it. Now there's a lot of price separation between that. You could kind of see if you kind of squint a little bit, I have the standard deviation bands light gray in the background of the chart. It was just too many lines for me to kind of look at it any other way. So we've been trading pretty much tracking this first lower standard deviation in gold. And at the bottom here, that second standard deviation in gold is kind of holding. So that's kind of the range we were looking at for that particular market. The point of controls, this is not a great volume profile. It's very, spotty, right? We have volume nodes all over the place. We have areas of interest all over the place on gold, but pretty big turnaround on gold. And just to and we'll talk about the daily chart a little bit more detail with sterling in a second. But so far, this is looking like a decent reversal pattern here on gold. How far down can we go? I do not know. I do want to pivot real quickly, though, before we get him in to the 10-year note and just kind of talk about it. We talked about it with Deli and Shai this morning when we started NinjaTrader Live, and I'm gonna dig my feet in a little bit and say, we're really range bound here in the 10-year note, right? And we've been in this range. And okay, it's a big range, that's fine, but we've been in this range really for from the end of February all the way till now, and we also have the top kind of framed as well, and that range is approximately 110 in 9:30 seconds. The top is 111 28.5, and we've been in it now. Yeah, we had some price dislocation up, we had some price dislocation down. Now we're right back in the middle of it again. All the moving averages are going sideways. And why do I talk about this so much? Because this is kind of an interest rate that a lot of people tag or peg, right? The 10-year, they peg. Think about how mortgages are set is a good example of that. So it's kind of important, kind of gauge on what's going on with the economy, and then you could talk about the relationships with the other commodities. The 10-year note yield right now is down about 5.5 basis points to 4.327, and then if we look at at the relationship between the 2 and the 10, we still have a pretty decent widening situation here. So it's 24 on the top, minus 9, about 33 basis points is the spread between that 10-year and the 2-year, and that's normal, right? So that's a normal yield. At least that segment of the yield curve is normal. I think most of it is normal as well. And so just looking back down on my quote board here, you could see I have the ZT, that's 2-year notes, right? And these guys are actually down a little bit, right? They're not up like the longer end of the curve. So the yield, the spread is across the board getting more normal. I'll call it more normal. I don't know if that's a good way to call it. Lastly but not least, I did want to talk about the Bitcoin really quickly here. Let me see if I have a Bitcoin chart up here or not. I do. Bitcoin, my line in the sand is 95,750. We didn't quite get there today. We came close, but again, I want to see a close above here. A close above here to me then is like, all right, we're going to get that 100,000 and then some on the upside, but we didn't quite get there today. I thought we were going to drive up there. I thought we were going to close, but we have a pretty big seller's wick on the Bitcoin right now, even with all the excitement with ARK, Fidelity, and BlackRock getting deeper into the crypto world, and we have a new SEC chair, Atkins. That's this is a quote, top priority is to have a foundation for digital assets. So where do you go in the futures market? You got Bitcoin, you got Ether, and you got all of that good stuff. So I just wanted to point that out. A lot of fun. I am going to bring in, though, very special guest. You've seen Sterling on NinjaTrader Live 2.0 before. Sterling is a longtime commodity analyst, commodity broker, trader extraordinaire. Known him for I don't know how many years. Let's go ahead and bring in Sterling into the conversation, folks. Sterling, good morning.
And good morning, Jim. And I'd like to guarantee to everybody out there, I am not a bot. I am, in fact, a carbon-based being.
Well, I don't know. That's exactly what a bot would tell you. They would say, "Listen, I'm carbon based, right? So I'm highly suspect here."
No, yes. Well, we'll just have to see how my algorithms are in fact running today.
Absolutely. How's everything going out in Nebraska?
Well, we got back from our trip from Florida very late Monday night. That was an adventure unto itself. And actually, Nebraska's looking pretty good here. We're going to have a high of about 72, and it's going to be sunny and nice. Little chance of some needed rain overnight and into Thursday, but nothing that'll affect any planting progress.
All right, all right. Is there still a move afoot possibly to relocate to Orlando?
It is entirely conceivable we will have a better idea in the next week. We did, however, experience, I don't know if you saw this on the news, we were on flight 1213, that Delta flight that the engine caught fire on.
God.
So on Monday, I get to experience, for those of you who don't know, I was for a long time a big frequent flyer. I'd fly 150 segments a year, maybe 200. This is the first time I've ever had to use the escape slide to get off of an airplane. And I'll say this about it, they work, but you get some velocity that makes any ride at Universal or Disney World look mild. You really fly going down that thing.
Well, hang on a second. I briefly saw the article that you sent me. Was the plane on fire before it took off, or how did that all go down?
They backed us away from the gate, and you could hear them starting up the engine and the starboard side engine. Next thing you know, I could see something yellow I was on the port side, something yellow hitting the screen, and somebody screams, "Hey, the wing's on fire!" And next thing you know, there's smoke, fire, and screaming people. There was no smoke in the airplane. And I'll give the Delta crew inside that airplane and the first responders at the airport in Orlando. They handled things very, very well.
Wow. Well, I'm glad you made it. I'm glad you made it safe
Yes.
and sound, and all's well that ends well. And by the way, one of the Order Flow Labs guys, Elias, he trades the close with us on NinjaTrader Live. He is a Orlando native, so if you need any tips, I will introduce you to Elias.
Oh, absolutely. I'd love to meet Elias. And any insider knowledge before we execute this, again, we're going to probably know in about a week, week and a half. And we're kind of looking forward to some warmer weather.
Awesome. Well, where do you want to start? I mean, you mentioned weather. Do you want to talk about some grains? You want to look at something else right now?
Yeah, oh, let's go ahead and start with corn, and then we'll kind of go from there. The corn market and the soybean market are diverging here. So if we take a look at the July corn futures, as you can see, we had our nice little run up. What are we looking at here? Is this a daily chart? This is a daily chart.
Yep.
And as you can see, you've got the big gap. We moved higher off of the report, and we have since started to back away a little bit. We just started planting this crop right now. Corn is 10% planted or 11%, which is a little bit better than normal. Same story for soybeans. They're about 7% planted. These ideas that we may see some more corn acreage come in are beginning to take hold. It's not enough to change the balance sheet materially, but it's enough to change market sentiment. And the funds, while they didn't get a big net long in place, the funds have been backing away from this. One thing I'd like to caution any bulls in corn about, the dollar index is deeply oversold. A lot of this rally that we got in the corn market had nothing to do with the price of corn. It had to do with the value of the dollar. And as we know, when a currency gets, deeply oversold, it can bounce like a spring. And that could make life a little bit rugged on a corn market that does look a little bit overextended here.
Okay, so in what report were you referring to, just to refresh everyone's mind?
Oh, that was the WASD when we were on on the 11th.
Okay, the last one. All right, yeah, that was a little while ago. All right,
Yeah.
so right now we're just sitting on that 8 EMA kind of comfortably. I kept your stochastics on the screen here as well. We're still kind of tangled in love between the percent K and D above that. Right at 80%, actually 79.12.
Yeah, we could get a little spot here where we could get, a little bearishness could bring a sell signal, especially if we finish, in the lower third of the range today. We move in tomorrow and see a little bit more weakness. We could get a pretty strong sell signal, but what we're going to need to drive that, I think, would be a bounce in the dollar.
Got it. Makes total sense. All right, let's move on. What's the next one?
Oh, let's look at the soybeans real quick here. The soybeans are diverging from corn a little bit. And as we can see, the soybeans are moving higher. A couple things driving this. One, the news flow, which I'm sure is driving everyone slowly insane or quickly insane, depending on how well inoculated you are to insanity. Ideas that maybe we're going to back away some of these issues with China. These are just ideas. There is no concrete policy here. But some of that I think is allowing for a little bit of upside action in the soybeans, along with that this idea that maybe our bean acres are going to back in a little bit in favor of corn. Now, while if we increase corn acres and decrease soybean acres, the soybean balance sheet is a lot more sensitive than the corn one. So we add a little bit of corn to the balance sheet, it doesn't matter that much. We take a little bit away from the soybeans, it does matter. So that in turn, I think, is working to give the soybeans a little bit of a lift. We do have some weather issues. It's dry out here, but we're going to get a little bit of rain. Central U.S. has gotten too much rain, so we may see a few planting delays there. And again, it's very early in that game. We'll have a much better idea in a couple of weeks about how that's all going to work out.
So, hey, Sterling, once crops are planted, could there be a scenario where there's too much rain and it'll, affect the crops?
You could get a situation where if you have, intense rain where fields get flooded out, if you get flooded out before emergence and you can't get it replanted, that would be another scenario where, you get your farmer, you get your seed in, you get it all planted, and the next day you get 9 inches of rain. Well, all your seed's going to end up in the drainage ditch. So that's, that is possibilities. Once they get, corn gets to, thigh high, soybeans get to about knee high. As long as you don't get some really tremendous flooding, most of the crops handle that rain pretty well.
No, that makes sense. It is amazing, though, how just about everything is affected by this tariff talk.
The tariff talk, it's basically grabbing the entire economic system by the shirt and shaking it. Trade, we are an interdependent planet, and that is a good thing. We need to have trade because when you have trade, that generally keeps the peace. You don't want to kill your best customer. The other guy doesn't want to kill his supplier. So everything is so intertwined here. That's the first problem. The second problem is we have no policy template. We have no policy clarity. So that creates a situation where these hypersensitive markets, especially when we talk about the S&P, where we have these intraday options, short-term options, everything else just creates this flame of volatility.
Yeah, well, that's an understatement saying we don't have clarity. Let's check out wheat. July's the front month, right? I got July up here.
July wheat, and wheat is, trading, it often trades in sympathy with corn. Not that the two are substitutes. You really don't feed wheat. This wheat is, Chicago wheat, which is the lowest of the three grades. We are seeing it back off a little bit here in a pattern that's not too dissimilar from corn. We will be looking, at spring, winter wheat conditions as we're fully emerged now, and the conditions actually look pretty good for that. So that's a higher quality wheat. That would be the Kansas City wheat, and so right now no problems in the land of wheat.
Got it. I just see a little bit of a cross under on the stochastic, so I was wondering if that's just a function of, a little bit of price action, or is that ominous?
It's a little function of price action, and it could be a little ominous. But again, folks, we are in a period of extreme volatility. So when you measure your trend lines, you can think about the very sharpest pencil you have. I want you to reach into your toolkit, and I want you to pull out the magic marker, okay, and turn it to the wide setting, because things are going to get a little sloppy in here. As you can see, this starts a beautiful example, actually. You can see we traded up, and if you had made your support line really narrow, oh, we're up above, we need to buy, and it wouldn't have worked. And the same with the resistance line up top. So, use these wider ideas about support and resistance, simply because we have markets that are going to spill over on either side because we are sloshing the truck all over the place. Even for wheat, which isn't really that big of a tariff issue. We don't export that much wheat. It's not that big of a deal. Most of the wheat we export is durum wheat into Italy, which is in turn returned to us as pasta.
So hang on a second. So that double-aught flour that I use to make my own homemade spaghetti pasta originates from
North Dakota.
Nebraska?
North Dakota.
Oh my goodness. I think the Italian American community need to know about this.
Oh, absolutely. And that's something, there are certain spots. And when you look at that specific food on your shelf, it comes to a formula. Corn for cornflakes is only grown in certain areas, so you get taste consistency. Wheat for this, they go out and contract this, just like the beer companies do with hops, to get that flavor consistency. So a lot of that ends up coming out of North Dakota. Some of it comes out of Kansas. A lot of it is spring wheat, which is the Minneapolis contract. Well,
Okay.
actually, the Durham is a separate thing, but very similar to spring wheat in its growing patterns. But best quality Durham wheat comes out of North Dakota.
So that's winter wheat.
That's Durham wheat. There are three major classes of wheat: spring wheat, winter wheat, and then Chicago wheat, which is just ordinary, just lower quality wheat. Durham wheat is a separate breed of wheat that's used specifically for making pasta.
But is it like planted in the fall and it goes dormant until the spring and then
It's
keeps growing?
planted with the spring wheat in the spring.
Okay, gotcha. All right, all right. I'm learning something new every day. All right, what else is on your radar screen?
Well, you want to talk about big stuff? You want to go to the S&P, or we want to save that for later here?
No, we can go to the big stuff. I mean,
That's
we're only
good.
up, 2.47% today.
Okay. All right. Hey, you got your bar right where I have mine, and you made it nice and wide, just like mine. That top bar, that resistance bar that you have up there, that matters. That is an area that has attracted selling. Market behavior, while I know there's a sense of enthusiasm because we've managed to string two big winning days in a row, none of this action is normal. None of this price action is healthy. Markets that are healthy do not go up like this. Markets that are healthy do not go around and around in circles like this. So what we have here is a very news-driven pattern. I want to remind everyone that gaps get filled. And I thought this opening and the behavior when I saw last night, I thought it was preposterous. Yes, Tesla did not collapse. I'm not sure that Elon Musk can fix what has been done to Tesla. Tesla's main buyers are more likely to vote for Joe Biden than they are to buy a Tesla truck and drive an F-150. He may very well have permanently damaged a big chunk of his client base, and these people, they will bear a grudge, especially when it comes to buying a car, and they may not come back. So if Tesla does see these problems continue and can't somehow change their image, they're going to have a specific problem with those automobiles.
Yeah, I mean, there's definitely some brand name damage that's happened. However, in my experience over the last 20 years, every time, every single time someone discounted Elon Musk from doing something, he turns around and does something. And I expect more innovation here in the future with these autonomous cars, these self-driving cars. I drove, I told the story already, but I'll tell it again. Me and my brother went to lunch downtown Charleston, had a couple cocktails, realized, uh-oh, we probably shouldn't drive home, put the car on autopilot. It took us from the garage downtown to my front lawn, and we didn't have to touch the steering wheel, the accelerator, the brake. It was the most amazing thing I've ever been a part of. It was wonderful.
Oh, I agree. Technological innovation. So what we have here is the unstoppable force about to collide with the immovable object with Tesla. I had a political science, or not a political science, but a sociology professor tell me that the human political mind is formed before the age of 10, and it is one of the most emotional components in a human in the way they think. And that is the force that Musk is going to run up against. Has he so enraged his potential client base that they, no matter what, are not going to buy this automobile? Because yes, he will innovate it, but I can guarantee you Mercedes-Benz, BMW, Chevy, Hyundai will also be innovating right along with it, because remember, cars are monkey see, monkey do, and they all basically look and drive alike with the differences. So that is going to be the challenge that Musk is going to have, and that is going to be one of the challenges I think that Tesla stock has. So, but getting back to what we have today, I would be very wary of this market if we give back today's gains. I would be very wary, because it looks like right now this is
we're
a
selling
daily
off.
chart. We have come
Yep.
back. How much are we up now? What's the last on the S&P?
So 116 handles, about 2.18%.
up 116. So again, that 5,500 area right where that bar is, that is that is a problem. Now, what we're seeing here is we've heard of the noon balloon. That's what bear markets have, and the noon swoon is what bull markets have. And we're almost to noon, but I'm very leery of this. I think we may have overstayed our welcome on the upside. And if we reverse this, that's going to be the first stage of what could be a 4-day selling pattern that sets up that could be tremendously bearish.
I haven't heard noon balloon in I don't know how many decades, but
Well, here's the noon balloon is a real thing, people. And this is true for almost every market. What happens is around if you're in a bear market and the market's grinding lower all morning, very often you get a little pop around noon. It's say, well, the sellers went to go get lunch, or the bad traders are at lunch and they're, buying whatever you want to attribute it to. But it's a real thing, and it can be a tradable thing. So that's something to kind of pay attention to if you are in a bear market. The noon balloon can be, give you a chance to fade because remember, a bear market, what we want to see is strong, powerful openings and weakness that filters through the day and we finish weekly. That week on the day, that is a true picture of what a bear market is.
yeah, well, that's great. That's great advice. I'm just going to throw in a little bit of a fib right now. This is an intraday chart, 30-minute intraday chart. Just see where we're at. A couple things that strike me on this is we're below the session VWAP, suggesting maybe sellers are in charge. Clearly, we have a big red candle. And then we're also approaching that 61.8% retracement. And on the intraday, we get to close below that. That's going to be hard to overcome, but we'll on a 30-minute candle. But we're not closed below that 61.8 yet, so we'll keep monitoring it.
Well, let's see, but yeah, I would agree. A break of that with the fact that we got up and we tickled that overhead resistance. We didn't get close, but we got fat magic marker close enough. That's enough to make this market nervous. And since we are in a completely mercurial news-driven situation, we are one piece of news away from erupting or collapsing at any given time. It's kind of like trying to trade during a hurricane. You never know where the next landmine is.
You do not. Well, especially in today's environment with the crazy news cycle going on. But let's move on. Let's move on here. I want to cover some more ground, and we got a lot of these markets to talk about. The one thing I did want to mention to you though is like that. Yes, Tesla was totally shadowed by Trump's remarks about Powell, and about Trump's remarks about China, which gets me to the 10-year note. I'm going to pull this guy up. This is my favorite market of all time, by the way.
If you're new to trading, this is actually a good market to trade. You know what reports when to step back from. It has great volume. It is considered the smartest of all the markets, so that would also makes it the easiest to learn. I have a friend at the Board of Trade who he and I would be on CNBC sometimes right after each other, and he asked me to start explaining grains to him, and he was a big, smart fixed income guy, and he just looked, he said, "That's way too complicated. Why do you do that?"
Yeah.
But
my brother was on the floor of the Board of Trade, and he got to sit right next to Rick Santelli, and he learned more from Rick on 10-year and then the knob spread and the bonds than anybody. But it's a great market to trade. I mean, we're right in the middle of this consolidation range, and a lot of people are like, oh, well, no one wants to buy U.S. debt anymore. Everyone's abandoning U.S. debt. But prices have been pretty consistent here for the last 8 weeks.
And that is a sign that inflation, we've had some pretty good fundamental things to support 10-year prices. And some of that would include, better than expected inflation rates, fairly stable economic numbers, nothing over inflationary or overtly inflationary has really come out. We have some things that have been a little bit of trouble, but we haven't had much trouble. We clearly had our spike where rates came down meaningfully, and then we had our dip when rates obviously went up. But right now we seem to be in a fairly calm state of water. That does not mean the bond vigilantes are not going to show up. And if they begin to get uncomfortable, we saw how quickly rates could go up.
Yeah.
By the same token, if we get a risk-off scenario, we could very well see rates come in as long as we get the combination of the dollar higher, bonds higher, S&P meaningfully lower. That is a situation that could push the 10-year higher.
Yeah, and speaking of the dollar, I mean, at this point, have you been following the Swiss franc?
I have been actually.
I mean, this has been incredible rally on the Swiss franc. I mean, it's a matter of fact, it's freaking out the Swiss National Bank so much. They're thinking about, zero interest rate for their benchmark or even negative interest rate for the benchmark to pick up their exports. I haven't seen anything like this in a long period of time.
Now, and this is a jolt for Switzerland. Remember, what is Switzerland? They are an export-based country. They export services, i.e. banking. They export chocolate, wristwatches, and army knives, amongst other things. But that is one of their main exports. They're also a big dairy supplier into the continent of Europe. So seeing their currency get out of control, the Swiss pride themselves on being the best bankers and on keeping a stable currency. So yes, seeing this rush into their currency, I'm certain is making them nervous because they don't want to be manipulators, but they don't want to see instability in their currency either. So this is a little bit preposterous here. And if we get that bounce in the dollar, the Swissy would be a currency that I think would be targeted because it is simply their economy is not as broad based as the rest of Europe or even the United Kingdom.
Yeah, so when I look at this, when I'm thinking in terms of risk off, risk on, I look at the Swiss franc and the Japanese yen. If those two guys are green, and it seems like we're in a risk-off environment, then that confirms it. And other than that, like the Swiss franc's kind of like sideways; it barely moves ever.
Yeah.
But this is an extraordinary move, and I think it's a tell. So we're not anywhere near retraced to the downside here on daily chart. The only hope here is that stochastic starting to cross under. We're still at an 81.34 state, but we'll see if that continues below 80 and get some relief on for make the dollar a little stronger.
Yeah. And again, they want to see their currency come in. There is a fair amount of tourism that comes into Switzerland. And if any of you have ever been to Geneva, Switzerland, it may be the most expensive place on earth in spots. I'm talking a hamburger and a beer running you $100, one beer in places. And seeing,
Yeah.
Adding another 15-20% onto that is just, I mean, at that point, you're kind of numb and you're just paying it, but it just adds insult to injury.
I've been in Geneva a couple times, Sterling, and one true fact here is nothing is open after 8 p.m. There's nothing open.
No, if you want to get food or anything like that, you have to go to a hotel bar right on the main drag right there in front of the lake. And that is where, they just jack the tariff up for everything there. I think I had a slice of cake once that was about 85 Swiss francs for a slice of cake.
Wow. It's
Yeah.
beautiful, though.
Oh, yeah, it is. It's a beautiful place on earth. And, heaven help you if you can afford to live there. I mean, it would be a great place. But, yeah they get their tariff, as it were.
Yeah. So, euro is the same situation. We don't even need to even talk about the euro, I don't think. But just kind of moving down to crude. Crude oil, this is WTI, light sweet crude, delivered at Cushing, Oklahoma. And, we had a nice orderly rally until today. Then we had a decent sell-off.
And again, economic concerns are driving this. I would be a little leery if we get confirmation with a lower day tomorrow. We do have an outside day lower close. That is typically not a healthy sign. It's not a guaranteed sign, though. There are other indicators I like better, but that is a problem. And looking at the stochastic right there, it could potentially, with lower trade either tomorrow or potentially on Friday, we could get a stochastic cross. And when we get a cross in the middle band here, not a cross up where it's overbought, where it's kind of obvious, but you get a cross in the middle like this, that can be a real problem. Sometimes those can be extremely powerful moves. And as you can see, we're just kind of clinging to support. If we punch a hole through that, we could easily break down below the low close of the large green bar intersecting with the horizontal line there. And we could easily break through that. And we're in a spot now where we don't really want crude oil to be cheaper. One, it goes below cost of production for U.S. oil companies. That means more imports. The second thing, it means most likely it's being broken and being damaged due to some sort of economic thing going on, and not just we're making additional barrels of oil. Drill, baby, drill. It'll be a year and a half before we see any oil in the actual market that actually affects the price from anything from a new oil well being drilled. And at these prices, oil companies can't really afford to certainly can't afford to frack, and they're not going to be all that inclined, I think, to drill, an ordinary well.
Yeah, I mean, I've been digging a hole in my backyard. I haven't found anything yet, but I live on an island, so it's all sand and an occasional megalodon tooth. That's about it.
You may have to go offshore there and get your oil platform set up. And if you don't find oil, maybe you can sell like fishing spots around it or something.
There you go. There you go. So, all right. So that's an interesting observation though about the stochastics. If it crosses up or down in the middle of the band, that's more important to you than if it crosses overbought or oversold. Is that right?
Exactly. Overbought and oversold are pretty clear signals. And the one thing about stochastics, they're pretty good at actually picking market turns. They're lousy for picking magnitude, though. You can get an oversold cross and you might back up. In this case, you might back up $1.50 a barrel. You might back up $9 a barrel. But when you get these middle crosses, this is where all of a sudden you bust support and the floodgates can open. And also to the upside, if we were to trade higher and break up the top side support, if we were to have some sort of problem, some sort of supply concern, you could get the same thing. But this looks like to me, like with a lower day, we're going to get that midday cross and we're going to be weak going into the weekend, which would correspond to a weaker S&P, a stronger dollar, which is the scenario I think I could see playing out for the rest of the week, where the S&P, it's already having some indigestion. We have a problem today, gets a little wobbly, a problem on Friday. Normally, when you see the stock market go down, the dollar goes up. We've had the dollar go down and the stock market be all over the place. Think about this scenario. You're in Europe. The euro is getting stronger. Your euros go further in the US. You buy some US stocks. Well, that chart gets heavy. All of a sudden, you're nice and profitable. You're going to be very quick to exit that because that was the premise of the trade. So we could see, the pieces are in place to get a move like that right now.
Yeah, no, I hear you. And while we're at it, let's look at RBOB gasoline. I mean, right, I live in a part of the world where, South Carolina here, Charleston here, we're pretty middle of the road in terms of prices at the pump. We never really see huge, crazy uh, prices or really, really low prices, and it's probably a function of where I live, is my guess. And I've only been here for 4 years, so anything could happen. But RBOB is just kind of going sideways right now.
Yeah, it's mirroring the crude trade. RBOB demand has been fairly stable. We should see the spring driving season pick up a little bit, and that will improve demand, which you might think is bullish, but keep in mind everybody knows this. So that's already cooked into the cake. Um, if we were to see oil break, we could see RBOB move back in noticeably. If we were to see diesel, heating oil come down, that would be another economic worry. If we see that spread between RBOB and diesel begin to move in noticeably, again, another warning that we may be looking at some soft economic numbers.
It's not called heating oil anymore. It's low sulfur diesel.
Exactly, because the only place they really use heating oil in houses is the Northeast. Every place else uses natural gas or electricity, which if you have electricity, you're using natural gas. So it's much more a proxy for diesel and for jet fuel.
Yeah, and so, all right, you just mentioned summer driving season. We have different blend requirements, right? In our gasoline, this is a statutory thing in the U.S. where you have to have a different blend. Explain what that blend needs to be.
Okay, the summer blend is designed, I don't know all the exact science behind it, but it's designed so it's less polluting. That is the summertime blend. And there's a switchover in the refineries that they're going to make, and that typically produces a little pop in gasoline prices because they have to adjust, shut down the refinery for a few days and make their adjustments so they can get to the summer blend of gasoline. And typically that can be a little bit more expensive to blend. Also, we're seeing a little more E15 creep in, which while it makes the gas a little bit cheaper, your car won't go as far on that E15 as it will on E10.
And so, yeah, so this ethanol, it's an ethanol blend, right?
Yeah.
Yeah. And so, that market, I know there's ethanol futures, but we're not going to talk about that. Um, is that a kind of is there any move afoot to change that, or is the ethanol business for fuel here to stay?
I think it's here to stay. One, it's kind of a free subsidy to farmers. Two, it's actually now it's probably better for your car because it allows for higher octane fuels to be made more economically. So along with that, it is a cleaner burning thing. So it does E10 is never going to go away. If we ever get to E15 or like they have in Brazil, flex fuel vehicles where you can go from 100% ethanol to 0% ethanol, I don't see that really coming down the road. I see more of a picture with vehicle fuel being in part, we're going to see a lot more hybrids. That's going to be the thing because we're not ready to go fully electric. And along with that, cars that run on E10 to E15 without too much of a loss. So I think that's where we're headed, at least, let's say, until 2035 or so. At that point, maybe we'll have the electric infrastructure in place. But until we do, I would expect to see a lot more hybrids on the road simply because they solve two problems. Your in-town fuel mileage is fabulous. You charge it on the highway, and when you're in town, you're on electricity, so you're not pumping out any pollution into these confined areas. So I think Toyota got it exactly right with that, and that's going to be something that's, again, companies like Tesla are going to have to contend with.
Yeah, but the hybrid Toyotas have been around for a long time. I mean, they were early adopters of that, and it became sticky.
Yeah, it became sticky, and along with that, they were early adopters, meaning they have worked the bugs out of the technology, so it's barely noticeable.
Yeah. So ironically, when my brother was here, he bought this new Tesla Y, and I've talked about this on the show, so I don't want to bore everybody. But it turned out that the guy I bought the house from we were already wired for it, so he
Huh?
just plugged it into my garage. It charged full charge overnight.
Yeah, how much are you charging him per mile for that charge?
I know. I was his free gas station.
Yeah, and remember also with tax agendas in states, most states fund most, if not all, of their road activity through gasoline taxes. When you begin to have electric cars, you're not going to have that same amount of gasoline sales, so you're not going to have that same tax revenue. So they may be looking at new ways to tax, and that's where you see these per mile taxes start to come into play.
Yeah, totally makes sense. Let's kind of move on to I want to move on to Dr. Copper if we can. I think we're barely still in the May contract, but I think we're still in the May contract. And I got a chart here. I got to move my fib out of the way. The candles ate my fib. Just back it up a little bit here. And nice orderly rally though. What I'm seeing from copper from the lows in April 9th. I mean, this is a nice orderly move up. Nothing too chaotic. I don't know what this blue line is. I'm going to delete it. But what do you make of this?
Copper is struggling here. There are bullish things with the tariffs. There are bearish things. The bearish thing is economic slowdown. Obviously, that's not good for copper prices. The other thing is, well, are we going to have a duplicity of effort? Meaning we have a plant in China that makes XYZ. We're going to have another plant in Akron, Ohio that makes XYZ. So you're going to have this plant building along with it that would be definitely beneficial for copper. Along with that, copper is obviously the metal of electricity. Your computers, your power lines, everything run on this. So copper has a fundamental, generally bullish tone to it. And as long as we can stay, fairly steady and see some bullishness in copper, that's an indication that at least there is some confidence that we're going to avoid an economic slowdown. Copper is one of those things. If we see an economic slowdown, if we see things really fall apart and copper prices fall sharply. When I go back, and if you've seen Wall Street too, what's the first thing Gordon Gekko buys when he lights up that cigar? Picks up the phone and he buys copper. Because this would be one of the immediate benefactors of economic stimulus would be copper.
Gordon Gekko's bullish on copper, so am I.
You just need to be bullish before he is.
Oh my goodness. So, and look at the stochastics too. I mean, this kind of reflects that kind of orderly rally, right? I
Yeah.
mean, and we've been what's amazing with this orderly move in this market is it's done in the backdrop of just chaos, right? And in policy, right? We don't
Yeah.
know what the policy is, where it's going to end, when it's going to end, but this market is doing its thing. So I'm encouraged by this kind of rally here as well.
Yeah, that does point to some economic stability. Caution and warning, the wick today. It looks a little bit like our friend there in the circle up there. We've got a big tail and a red
Yeah.
block. Here we managed a green block, but and again, stochastics, a little too much of this. We could be back down, chugging up against moving averages and causing a cross. So pay attention here, but so far so good.
Yeah, it's not a gravestone doji yet, but it's almost there. But I look at it, the ADMA is crossing over everything. It's crossing over the 50. It's crossing over the 21. Other than the possible gravestone doji, we didn't have continuation buying after we closed above the 61.8% fib line. So I'm a big fan on fibs on a daily
Yeah.
chart.
Mm-hmm.
And we didn't. I really want to see a confirmation candle above there for me to be like, all right, this is really in a bull mode right now.
Yeah, I would feel a lot better if this market could finish the day strong and finish above yesterday's high. That would look really good. Anything else makes me a little bit concerned, especially, given the wobble that we've seen in the S&Ps here midday.
Yeah, and I haven't seen that many calls for negative GDP yet. But
But, that Atlanta Fed number keeps coming up negative, but I wouldn't be too worried about that just yet. But very often, when they say we're in a recession, we've already been in the recession for 3 months. So, again, lack of clarity on policy is the underlying theme of all of this.
yeah, no, I'm with you on that 100%. All right, so we started off with the Bitcoin. Let's end up with the Bitcoin. I'm going to go to a daily chart here. Um, this is a daily candle, and I'm tracking the micro Bitcoin. This is the CMA Group's micro Bitcoin. It's a great market to trade, everybody, and it's a smaller size contract, right? But it has the most volume from any of the other Bitcoin related futures markets. So there's a little bit of liquidity in there as well. So again, though, best practices: enter on your limit, exit on your limit orders if possible. In any event, this is looking like the copper chart, kind of.
Looks a little like the copper chart. It also looks a lot like the S&P chart.
Yeah.
Yeah. Yeah, we didn't get up there. We didn't tickle the same levels of resistance. We didn't see the same buying enthusiasm. But we do have, we got our tail in the air there with today's wick. And it looks like your RSI, is that an RSI you have down there at the bottom?
Yeah, I don't know why there's an RSI. This is a legacy chart from yesteryear, but that's RSI is at 61.53.
Which, if you look, just looking at nearby history, this chart is telling us that we may be stretched a little bit here. And Bitcoin has a lot of drivers in it. It's supposedly anti-dollar and anti-gold. Well, gold has gone, bananas to the upside. Bitcoin didn't really enjoy that. People were rather buy yellow rocks than cyber rocks. So that's one little problem. And two, there is a historical correlation between this and the Nasdaq that some people have found. So again, we've had a good bounce. We've come up well, but today a lot of people took that money off the table. Will they come back as buyers or will they come back as sellers? I think that's the big question here. If we see weakness in the S&P, and again we trade down near to the bottom of the wick today, and we trade lower in the S&P, we could very well see that same mirror happen here in the Bitcoin.
Yeah, so I mean, I don't know if you caught the headline that might have helped some of the surge up. SEC Chair Atkins has just been sworn in the Oval Office, I think yesterday, or maybe this morning, but I think it was yesterday. And according to Reuters anyway, top priority is to have top priority, not like a high priority or a top 5 priority, but the top priority is to have a firm foundation for digital assets.
So that will, you can see this as bullish. You can see this as bearish. We need to have a foundation for digital assets. Are we going to make them legal tender? Would that happen? Would Bitcoin now become a direct competitor with the dollar? Would the SEC, would the Treasury really like that? Or is part of what Bitcoin makes Bitcoin is the fact that it's so unsanctioned? Is that one of the things that drives it? There's a lot of questions about this. Bitcoin is a very unique phenomena in that we've basically taken something that exists, kind of like frequent flyer miles, and we've turned it into this flowing currency. Now, I wish, they'd used American Airlines frequent flyer miles. I would be, world's first trillionaire. But that isn't what's happened. So if Bitcoin were to become sanctioned and become a much more organized and or regulated playing field, would it have the same attraction? Otherwise, why would I convert to Bitcoin when I could just use dollars and get the same effective behavior? That could take all that speculative fervor out of this market. So this is a very interesting time that we're entering here. But we definitely had some good buying on the rumor.
Yeah, so I'm gonna take the counterpoint just for argument's sake. And we have on my screen again, we had ARK yesterday, 267 million investment in digital assets, Fidelity 253, BlackRock 193 million. And so now once there's a regulatory framework around around the whole industry, not just parts of the industry, the ETF industry, but the whole industry, then from me as Joe investor is going to be like, all right, so now I'm a little less worried that the rug is going to be pulled under my feet and I'm going to end up with a bust investment. Does that make sense?
It does, in the fact that it does increase the amount of trust in the most broad sense. And yes, it may attract more money may flow in, especially the small money. Now, what happens if you follow COT reports? What happens when the small spec starts buying things? What should you be doing?
Oh, the small specs? Yeah, we're
Yeah,
doing the opposite. Yeah.
yeah. When you get, so this may set a framework where we see a lot of smaller investors begin to move into this and
Yeah.
feel a little bit more comfortable. Again, we'll see how this plays out, because this is really truly an interesting topic, and one that is certainly a teachable point of view about a lot of things about how market dynamics actually work.
Yeah, for sure. So we got a couple minutes left. Let me ask you, is the Fed cutting rates in May?
I seriously doubt it, unless, okay, here's the deal. Write down this number, 4,800 on the S&P. If in May we're trading below
All right.
4,800 in the S&P, Fed will probably be cutting rates. If we're not trading below 4,800, most likely, I think they will hold the course, simply because all the banter and everything going about is, trying to force Powell to do something will only make him do the opposite. If you try and force Powell to cut before he's ready, he will not cut. He will maintain his independence. And I think that's kind of where we're getting with all of this.
Yeah, so May 7th is right around the corner. I mean, we're talking 2 weeks, right? Pretty
Right?
much.
2 weeks, yep.
Oh, okay. Hang on, folks. We got a camera malfunction here. Hang on 1 second. It lasted pretty good today, by the way. So usually what I do is, hang on a second. See if we could pull me back up here. There
There
we
you
go.
go.
Oop. All right. Yeah, so that's 2 weeks away, Sterling. I mean, you're talking a 4,800 S&P in 2 weeks.
I wouldn't rule it out. That's the low of the move. And it, from where we basically are right now, to get to 4,800, we did it in 2 days. Two,
We
two.
don't need 14 days. We could do it in 2 days, is what you're saying.
Well, if we see a close into the gap from today, or anywhere in the lower, let's call it the lower quarter, lower third of today's range, followed by lower trade wire to wire tomorrow. That will set up a very unattractive daily chart pattern. If we come unglued and start to break, that would be on Monday, we could potentially set ourselves up in a situation where we now know where the top is. We know 5,500 is the ceiling. People could get very, very nervous, especially if there's any sort of incendiary news to trigger that sort of behavior. And yes, we can get, well, if you look at the big drop day where we made the low, we basically went from where we are to 4,800, yeah, 2 days, a day. So getting there in their current volatility situation isn't out of the question. If we were to flush below that, I would watch. That could get us the big flush we need, and we shake out the volatility and we can start working higher again and get some constructive and workable market behavior.
All right, all right. We'll take the elevator down. Sterling, we're out of time. I appreciate you being here at the last minute too. So I appreciate you being with us today. On
Oh,
NinjaTrader
anytime,
Live.
anytime. It would have been more interesting to have me on about this time on Monday when we were, on the airplane.
Yeah, no. Yeah, streaming live from a burning airplane.
Yes.
At any event, thanks again, Sterling. Everybody, thanks for being with us in NinjaTrader Live this morning. We had an awesome guest, awesome segment, awesome trading. How about Kane's second trade? That was a beauty. I do want to remind everybody, 2:30, we're going to be back. Order Flow Labs guys going to be trading the close again today, so that's must-see TV. In the meantime, folks, appreciate everybody being here, and have a great lunch.